Member Foltz.
Here.
Member Lewis is absent. Member Morse.
Here.
Member Hall.
Here.
Member Rockwell.
Here.
And Member Sperlingwood. Here. And Chair Jacobson.
Here.
All right.
Thank you. Okay. Now we have adoption of the agenda. So I'd like to make a motion.
Can I make one comment? So we're dealing with a new system to put meetings in. You all probably have noticed that as well, called eScribe. We didn't put a utility update or state of the utility. We would like to do that. So if you could add that at the beginning of the agenda, that's appreciative.
And you have that tonight?
So yeah, so I'm going to give a brief. It's not going to be the large quarterly one, but I'm going to give a brief one tonight. We're going to have something like cybersecurity.
Maybe next month we have a real one.
Yes.
I would also like, while you're talking about the new format, for everyone to note that this format puts the non-voting members as staff. We are not GRU staff. We are non-voting members of the UAB. And so it's been going on quite a while. So I just want people to know, I've had phone calls to say, back at GRU? No, I'm not back at GRU. So just want to clarify that.
So
Right here on every meeting, it puts us down as staff.
would someone like to make a motion to whatever effect they'd like?
I'll make a motion, we adopt the agenda and add item for state of the utility at the front end.
Is there a second? Any discussion? All of those in favor signify by saying aye.
Aye.
Opposed, nay. Passes unanimously. All right. Approval of the minutes.
Approve the minutes?
Have a second?
Second.
Any discussion? All those in favor signify by saying aye. Opposed, nay. Passes unanimously. All right. So I guess now we'll go to the state of utility.
All right, thanks, Mr. Chair. I just have a few things, and then we're going to talk a little bit about cybersecurity. So the few things are during the summer, as we've talked about many times, is it got hotter this summer, and the fuel costs rose, skyrocketed really across the world. We waived late fees through the summer. We're continuing to waive those through October. We were going to end it at the end of September. We're going to continue to waive them through October and then start back with those fees in November. So I just want to kind of give you that update. Also, as part of that the LEAP program, low income energy efficiency program, we got additional funding for that through ARPA money. And so we're right now at somewhere around $1 million a year that we'll be investing in that program. We wanted to extend it to as many of our customers as possible. So we translated all of the forms, both online and printed to Spanish to make that more accessible. So I want to give that update. Energy surveys. So this year we were able to provide nearly 500 energy surveys to mostly residential, but both residential and commercial. And we've done 230 LEAP inspections, and we did the actual implementation of LEAP in 130 homes. So we're hoping next year that number goes up a little bit, but that's pretty close. And the 230 inspections allows us to have enough in the queue to just kind of keep going. Our limitation was really contractors to help do the actual work. And then from a storm standpoint, as you all are aware, Hurricane Ian came through the state of Florida. While it was on its way, we got into our storm mode and stood up our incident command structure. About 3 days out, it looked like the storm was going to come right through Gainesville. And with the predictions that it had, it would probably be the worst storm that I'm aware of that we've experienced. So we were preparing for that. We brought in external crews. We had all of our employees were transitioned to gray sky roles. So all of our employees have blue sky roles that they do every day, and every single employee has a gray sky role. We started moving that to gray sky roles. As it got closer, the storm started shifting east and south, and it kind of came across, we all saw Fort Myers and through the middle of the state. And so we got some high winds, A lot less rain than we thought we were going to get. We had a total of about 17,000 or so customers that did lose power, even with the winds, gusts of 35 up to 40-mile-per-hour winds. It takes out branches and things fall on lines and you lose power. We were able to restore all of our customers electricity by 1 a.m. on Friday morning. So we were able to do that very quickly. And then from a kind of a wastewater system perspective, well, I'll talk about the plants first. Our plants, when the storm comes, we actually put them on auxiliary power so that if they do lose line power, it's not a disruption. We're kind of controlling that transition to auxiliary power. So we did have the plants on auxiliary power until Friday around midday, and then they went back to line power. From our lift station standpoint, we lost power at a couple of lift stations. We kept up with all the functioning of those, so there was no impact to the environment or our customers, and got everything back online. So, really for us, it was a good thing, that we avoided the storm. Right after the storm, we began contacting our mutual aid partners, and we went ahead and sent several crews down to Bartow, Florida. There's about 10 linemen, line workers, and a safety person. And then we also sent a couple of our engineers to Lakeland to help them as well. And so we did that for several days through the weekend and into the next week, and then brought all of it back. So I think the peak that I saw was 2.8 million utility customers were without power in the state of Florida. We were 17,000 of those 2.8 million. So any questions on that storm response?
Do you have a staging area for external crews? And when you say contracted, are these contracted line people or other utilities that you contracted with?
Yeah, so there are other utilities. This storm was we have a utility in Louisiana that's kind of like a really good partner. We've gone and helped them many times. They've come here, even to the point that their line workers really know our system and they know where things are. So it's really nice to have some of your partners like that. As the storm was approaching, a lot of the utilities in the state of Florida started sucking up those mutual aid partners. We were talking to utilities as far away as Minnesota. If we would have gotten hit big, that we might have had to draw from because so many utilities, you just, as that storm's approaching, nobody knows where it's going and everybody starts securing those folks. We do have a staging area. Primarily, we feed the folks coming in and we help them find hotels, but they don't sleep at our facilities. But we do help them to find hotels. So we have a staging area where they come in, they go through a safety program and make sure that they're able to do that. And they work with different supervisors to figure out what crews they're going to go with. They're always going out.
So they're individuals. They don't bring their trucks.
Oh, no, they bring their trucks. No, they bring their
That's
trucks.
what I meant. The staging area. Do they have a staging area with the actual trucks and everything?
At our East Side Operations Center is where we stage them. So we have space there to stage a lot of their trucks. But when they go out in the field, they're typically going with somebody from GRU along with those crews.
And they're all using new radios.
So we do distribute some radios, and then some. It's a lot of nowadays it's a lot of contact through cell phones as well.
Anyone else?
Cell towers.
Yes. Yeah.
I just wanted to say thank you to GRU folks. I think, employees at GRU do so much for the community every day, and they're unnoticed as long as the lights are on and the water's going, we don't really notice them. But particularly in the lead up to something like this, it really becomes apparent just how much folks here take on. So I was just thinking about that a lot as I was watching the storm and everything, what folks here were up to. So yeah, so thank you.
All employees of GRU, if they're new, they may not get this as quickly, but all employees of GRU know when this happens, you kind of go home and you tell your family, hey, I don't know what the next couple of days are going to look like, but I'm committed to the utility, and that's the expectation of an employee, and our employees respond really well to that. People have to be put on Alpha and Bravo shifts, so there's some people that are working 7 to 7, and the other ones are working 7 to 7 at night, and so our employees do an amazing job of reacting and responding to that. And we have a planning group that really plans for emergencies like this all year long. And then we really get prepared heading into the hurricane season. And they do a really good job, and all of our employees do an amazing job of kind of transitioning to that gray sky role and the expectation that you are truly a first responder throughout the event.
Teresa,
And I just want to back up a little bit on that and say also thank you to the families of GRU, because when your family member is put on duty, everything else that happens at home, the one at home has to take care of: the kids, the house, the power, whatever issues they have. So it is a whole family affair involvement for the GRU staff.
I will say during the hurricanes in 04, I was working long hours, but I was in air conditioning and my wife was at home without air conditioning. So she didn't think it was too rough on me at all.
Yeah, question. When you bring a crew from another place here, are you actually paying hard dollar for their work? Or are you swapping hours or something?
Yeah, so we have mutual aid agreements already in place. So that kind of describes what that interaction is like how much we're paying them and things of that nature. I'll let Claudia correct me. We do pay them for that work that they're doing. And then we're looking for reimbursement after an event from FEMA. But if there is no reimbursement, we are paying them hard dollars.
anyone else? Going back to LEAP for just a second. So you said we'll have $1 million for LEAP this year. What was it last year? Just for
So typically we budget around $400,000 a year. So we basically got an additional $2 million, and we're spreading that over a 3-year period. And so we're kind of adding it to what's already budgeted. And like I said, we're a little bit behind this year because of contractors and everything, but we've got so many in queue. I think if we can get that going, we'll be able to catch up. Yeah.
Teresa.
Follow up on the LEAP. What exactly are they doing to the homes for the customers?
So various things. So it could be everything from looking at insulation, doing stuff with insulation, to air conditioners. So they could all the way get up to replace an air conditioner. The program has changed to where it can be up to $10,000 be spent on a single home. So it's pretty significant improvements that are done to the home that will reduce their energy consumption pretty significantly and therefore reduce their power bill going forward.
And the contractors, you said there's a pool of contractors?
Yes, so there's partnering contractors that we have, but contractors are busy doing a lot of things nowadays. And so some of them, we've had a struggle trying to get some more. We've done a couple of marketing things to try to get more contractors kind of on board and working.
That's a sign of the times when you can't give money away.
Yep.
Anyone else? And are we supposed to be opening this up for public comment on issues like?
I do have one more thing before we get there though. So Walt, I'm going to introduce you and let you kind of go. Walt's going to talk a little bit about cybersecurity. Walt is our Chief Information Officer here at GRU and responsible for cybersecurity for the utility. And I know the board has expressed interest in that before. So Walt, take it away.
Thank you, sir. I appreciate it. We'll move around a little bit because it is a little late in the day for me. October is Cybersecurity Month, which means we have a large focus on cybersecurity and making sure that our environments here at work, as well as we give recommendations for what you should be doing with your personal devices. I brought a couple of people here with me tonight. I'm going to turn this over to our Governance and Compliance Director. The cybersecurity piece falls under him. He's brought some members of his team that have done a fabulous job. I was actually at a seminar this afternoon at about 2:30. We had nearly 100 people in the seminar, which is absolutely unbelievable for as long as we've been running the program. Again, it's a program that's meant to educate folks to make sure they know what they're dealing with as we get into a more digital environment and digital world. TC?
All right, thanks, Walt. So good afternoon, everyone. Thanks for having us. TC Kelly, I'm the Enterprise IT Strategy and Governance Director. So I oversee the cybersecurity program and the cybersecurity team. So a couple things we're doing throughout this month to promote National Cybersecurity Awareness Month. We're hosting virtual sessions on Tuesdays and Thursdays And we're inviting all staff, all employees to attend these sessions where we give out good information on best practices, just to try to increase knowledge and awareness for what employees need to be on the lookout for. So some examples of that would be phishing emails, malicious, attacks and attachments to inject spyware, malware, or some type of virus into your computer. So we're doing a really good job with just trying to get the information out there to help our employees just have that knowledge and awareness of what to look out for when they're in their emails and in their day-to-day work. Another thing we're doing is we're sending out frequent communications via email. And these emails also contain security best practices. And we're also following up with current events and just kind of giving folks an understanding and kind of a lay of the land as far as cybersecurity across the nation. Another thing that we do is we offer cybersecurity awareness training. So this year it is going to run for the month of October. It is not mandatory, but we are highly encouraging everyone to participate in this training. Next year, due to state law, the statute, or excuse me, House Bill 7055 passed past July. So that's Florida's State Cybersecurity Act, and it's going to require cybersecurity awareness training to be mandatory for state agencies and local governments. So a lot of new requirements are kind of coming down the pipe with new cybersecurity laws and requirements. And next year, October 2023, we will be rolling out training that will be mandatory for all city staff and employees. So still got some time, but we're kind of ahead of the curve, working on policy, and we'll do a big organizational change management and communication campaign around that, just to make sure our employees understand and they're aware. I did bring a couple folks from the cybersecurity team. They joined me. And again, what really makes this program a success is people. So these folks put a lot of hard work and effort into making this program what it is. So I have with me Anessa Coffey. She's our new IT governance and compliance manager. She helps with some of the process improvements around our risk assessments and basically doing vendor risk assessments before we engage in a new contract or an agreement with vendor to provide technology services and solutions. Chad Campbell, he's our cybersecurity architect. He actually manages the IT security team and oversees the cybersecurity program. So he has done an excellent job with taking cybersecurity from 0 to 100 and making it what it is today. We have Z Enrique. She's done a fantastic job with coordinating the events for this month. She sends out frequent communications on security best practices and what to look out for. Probably see her emails in your inbox day in, day out. So she's sending them at least 2 or 3 times a week.
Sorry.
So, and this,
We delete them all very quickly.
but really, cybersecurity is definitely a thing to take very seriously. We're taking it very seriously here at the City of Gainesville and GRU. And we did receive a proclamation last week at last Thursday City Commission meeting designating October as National Cybersecurity Awareness Month. So big kudos to the team. It wouldn't be what it is without them. So thank you guys.
We take all of your effort, I know. There's a lot of people out there who don't know what to do with computers. I don't envy your job.
I'm definitely willing to help out. Just one thing, and I think that PC will humble. This program was actually nationally recognized a year ago. So we're looking to get that kind of out external recognition as well and continuously improve the model. And again, the team has done a fabulous job, and it's globally, it's a citywide initiative. So it's not just a GRU thing or a general government thing, it's citywide. In fact, working with Mr. Cunningham, I've been tasked to do a lot of citywide initiatives, and we're working for that. For that, we thank you for your support. Yes, sir.
Is there any interaction with NERC?
We are working towards some of that. Great question, number one. We are working towards some of that. We believe that cybersecurity is a global kind of initiative. Everybody has to be involved. Everybody has to play their role. Us as the IT SMEs or subject matter experts, we realize that we can lend some definite value to some folks, and we're definitely working towards that. It's not perfect yet because, again, this is something new, but we definitely are working towards that.
But there's no, is there any oversight when you call it the utility in that respect?
By NERC.
There's,
By NERC?
Yes.
There's NERC oversee for system control, and they do, that is active, excuse me.
So there is, what Walt's referring to is IT's involvement is that we're trying to figure out how to integrate that a little bit more. But yeah, they currently NERC has oversight over the system control regarding security.
Any other questions?
Yes, sir.
IT is separate from OT, which is operation technology, which is system control and that, so they're not, NERC covers OT, and then IT is like how we communicate with the public and, you know, handle our finances.
So maybe NERC gets everywhere.
Essentially.
They get.
Great piece you put out there, but OT and IT are very similar. OT has longer fit because it's more equipment related. IT is more software, appliances, servers, things like that. But there's a lot of integration, and right now what we've been tasked to do is see what makes sense, so we can meld together and provide the best protection, especially with cybersecurity. Knowing in OT, when things are 15, 20, 30 years old, there tends to be gaps that are, found out over time that people can exploit. So what we're trying to do is work with those folks as a consolidated group and one effort to kind of avoid that.
Anything else? Anything else on state of the utility?
No, so yeah, that's it on the stage. Thanks. Thank you all.
All right, well, moving along, next item is the GRU amended debt management policy.
So yes, Mr. Chair, our Chief Financial Officer is just going to kick us off. We are taking this to the City Commission on the 20th. It went to the Finance Committee end of August. So I'm just going to turn it over to Claudia and let her.
All right, good evening. So GRU has a debt policy with both other entities, and it's a well-established debt policy. I'm going to give you a little bit of a history of GRU's debt and kind of why we are amending the policy today, just to kind of, it's mostly for the new folks, but also as a reminder for those of you that have been here for a little while. So GRU's debt started increasing back in 04, 05. If you guys recall, we've gone through this during the budget cycle. So it was generally pretty flat when we got into the 04, 05 timeframe. Started drifting up towards the 08, 09 timeframe. And then when the PPA for the biomass plant was signed, it was imputed as debt. And so it took an upward trajectory. When we bought out the PPA, it still impacted the utilities debt. So the utility is highly levered. Really needs to have a lot of debt at the utility. And so over the past 4-ish years, we've been working with the board and the commission to address the utilities debt as well as cash levels to make sure we have appropriate cash levels, but also that we are trying to bring down that tall kind of a mountain of a debt and chipping away at it over time. So every time we come to you with a transaction, and we have a couple of them tonight that Mark will speak to in a little bit, it's trying to bring down that mountain. So with our debt, we manage, we monitor it, we pay attention to it. It is a 365-day job just to manage the debt portfolio at the utility. It impacts multiple departments. So you have accounting, you have treasury, you have rates, you have the departments that are trying to figure out how to fund their projects, knowing that the utility is highly levered. It impacts everybody at the utility, and it impacts everybody in the community as much debt as we have. So we look at fixed rate debt, variable rate debt, swaps. We are constantly keeping our eyes open, because every time we can bring down interest cost or create savings, it creates savings for our customers. And when we look at it, we don't look at next year. We don't look at the next 2 years. We are way downstream when most of us are going to be retired. That's what we look at. We look at the long-term, look at what this utility is going to look like going forward. So if we're going through the budget discussions, 18, 19, 20, 21, 22, part of those discussions were we needed to stabilize the utility as far as the cash levels first and foremost, right? And so we put in a cash balance policy back in 2019. And then as part of the discussions with the commission over the past year and the board, we wanted to put in something that essentially says we're going to delever. Bring down debt. Either that or not issue as much debt. So the utility requires debt. I want to make sure I'm clear with that. The utility has to issue debt in order to continue to fund its capital infrastructure. because we don't fund our capital infrastructure, we can't provide services to the customers and receive the revenues to continue that cycle. So we are always going to be issuing debt. It most likely will never be zero, at least in my lifetime. So as we move forward, we're trying to manage what that looks like. And so when I say the words de-lever or de-fees, it's trying to either bring down existing debt service or not issue as much to fund the capital infrastructure. So we went through 2020, we did a number of transactions, which had some savings for the utilities, about 134. The pension obligation bond issuance from general government was 60-ish million, so let's call it 200. We're taking those savings and starting to defease debt over time. It is not an easy process because we have to time it for different call dates, et cetera, when it comes to the bonds. The other component to that is not issuing as much debt. So we would use what we call utility plant improvement funds, so UPIF dollars, to start to fund more of that debt portfolio. So it's typically a 50-50. So we would issue a bond dollar and use an internal equity dollar. Right? So we're trying to issue maybe 50 cents of debt and do $1.50 of internal equity. And that takes time as we move forward. And so those are two of the largest components to the changes in the policy, right? So we want to use the savings from the transactions that I've described, at least keep a 50-50 split between UPIF and construction funds, and maybe we start to shift that up. But those we have targeted reserve levels that were established in the cash balance policy back in 2019. So as the cash starts to shift up above those reserve targets, that gets moved into these mechanics. I will tell you this past year has had I'm going to just say it's probably an extreme impact on the utility, just like everybody else, right? The costs are going up. We have assets that we haven't been able to monetize, like the pool levelization, and we're having some impacts in operating cash. So we're adjusting all of that. We'll come back to the commission and the board next year and talk about changes to the reserve level so that we have adequate levels of operating cash. So in the short term, it's painful because we're dealing with all of these things. These are putting in plans and processes for like the next generation, if that makes sense. So going forward, it starts to delever the utility. So that's really what a large portion of what's in the debt policy. The second piece is, as staff has worked over the past decade, trying not to get a downgrade, right? So we're working with the rating agencies, watching our credit metrics, et cetera. I realized that we had never gone back to the commission and had them codify our credit metrics. And so that's what the debt policy, it's, there's some stretch goals in there, but that's what it does. So it's delevering and codifying our credit metrics. So with that, are there any questions?
Yeah, well, first, I just want to say I'm always impressed and appreciative of what you guys are doing, the challenge you guys are facing. With the interest rates going up, I assume that's making life harder to achieve the goals, or is that impacting?
Not really, because we've swapped out most of our debt portfolio. A very small portion is unhedged. And now we have a couple of transactions tonight that will actually start to bring some savings back into the utility. Where we're seeing inflation costs are more in the non-labor pieces and somewhat of labor, because the labor market is really, really tight. So when you're looking at the debt portfolio, we manage it pretty decently, I would say pretty well. I'm not trying to toot our own horn, but we do have a team that works on this. The impacts to the utility are typically in the non-labor cost and some of the labor cost, because we are experiencing a pretty high vacancy factor, and it's really because of wage inflation that's out there.
Any questions, comments?
What the UAB really needs is a document that shows something like a 10-year plan. Where you plan to be over, 5 years and 10 years out. Would it be possible to come up with something like that goes into blue sky?
So, Chair, we provide that during the budget cycle. So we provided that last February that showed the 10-year forward look of the utility going through, oh my goodness, I think it was to 2032. And to jog your memories, so we're going through, it's the cash, liquidity, and reserves. So I'm trying to jog some memories. And then we also do some of the debt piece. So the debt piece, you can see going out to 2047, 2051. The forward look as far as the cash liquidity and the reserves goes forward to that time frame that you're thinking about. You'll actually see it roughly next February or March, that forward look. And the way that we showed it last year, we were showing it by system, because when I'm talking about reserves in each system stands alone. They don't cross back and forth. So the electric system was showing under reserve for the next few years. Telecommunications is showing under reserve for all years. Water, wastewater, and gas were, pretty decently healthy. So when we're looking at this debt defeasance or debt leverage, we're looking at each individual system, and when we can start to, pull the trigger on each one of those things as we move through time. Hopefully that answers your question. So we do provide it, and you'll see it again next spring.
And I thought that was your answer was going to be that, but it may, to Fletcher's point, nice to get some kind of just the broadest overview, easily digestible for people who aren't big numbers people. Just to
Talking about the financials, you're looking at.
like a question. I mean, I get this. I hear GRU is financially unstable and they'll be totally bankrupt in the next 5 years. And I tell them what I've seen. There's a plan. That it's not perfect the way we are now. There's a plan. They're getting there. They're getting debt under control, but something that kind of
You'll see it in the
slide or to paint that picture. So we really get it and to spread that message.
You'll see it in the budget cycle. And the reason why I keep coming back to the budget cycle, so we showed it last February or March. So that was the plan starting in 23 going forward. When we come back next spring, it's 24 and going forward, because we're setting all of the expense levels, the capital projects, the debt. We're doing that on an annual basis. So once you do that, we cycle forward to the next year and then relook at it again. We're not remodeling every month.
Fletcher did that.
Well, we see it as the foundation, the IRP. So I presume that you're going to be integrating it completely with the new IRP, right?
So I'm going to answer that in two ways. So when we had the IRP before, the first one, right? We took a look very specifically only at the debt that would be required in order to fund that IRP, the one from 2018. Remember, it's the 6.7 billion or something like that to move that forward. So we will model very specifically the IRP, the funding for the IRP. Until the IRP is approved, we won't necessarily pull that in to our rate function, right? Because that can create a lot of extreme dynamics in there. So as this process moves over the next 12 months, 18 months, once the IRP is approved, and I realize it'll be updated over time, we can run the debt, see what it looks like, and then everything good to go with the board and the commission. Then we pull it into the modeling, because the modeling starts to tell us what the rate impact is going to be. Because if the IRP is more than our capital plan, it's going to have an impact on base rates. So there will be a little bit of offset like in the electric system, because if we're changing generation or looking at purchase power in the electric system, some of the capital and the capital dollars in the electric system would be foregone and would move towards the IRP. So it won't be all sitting on top of the existing electrical budget, but there will be some movement there. So if that makes sense, we absolutely will be pulling it in and looking at it. And if it's approved, go ahead and pull it forward as far as the base rate impact. So if the IRP is above what we model every year for the electric system, there will be a base rate impact in the electric system to fund net.
John, I can get it.
No, I think you pretty well understand you have to have input into that IRP. Right.
Yeah, we'll have input to the IRP. They're still working through the
They might
process.
go out and say, look, we need 4 power plants, what do you call it? And they said, how are we're gonna fund that? But it's gotta be back and forth.
Yeah, we have to, yes, we'll be involved because we have to figure out how to pay for it. And if there is, those base rate impacts to customers, what does that look like? I think the one in 2018, it was extreme, 6.7. It's like a 64% base rate impact. That the plan is not to do this in a financially unhealthy manner.
And I think also like part of the IRP is going to be the discussion with the public is going to be what are the priorities as we get into the IRP? And if low rates is a priority, that's going to drive the base condition and the comparison to the base condition. And so, yeah, there's going to be a lot of iterativeness and back and forth on that, and we'll have different options. And then as Claudia mentioned too, you know, this isn't do an IRP and then we're on that track for 30 years. We're going to be in a process of updating as technology changes and the industry changes, as the financials change in different parts of technologies, then we'll be updating that IRP as we go forward.
Anyone else? Yeah, Jeff.
I just want to make sure, are there specific amendments to the debt management policy that we're supposed to be hearing now, or is this just coming down the pipe? Because I'm not sure I heard, and I thought I heard Claudia say that we don't actually have a codified debt management policy, so that's in the works.
No, we have a debt policy.
Okay.
Actual debt policy. And I know I'm just kind of showing you a piece of paper. It really exists. So this is the debt management policy. All this is doing is putting in two sections, one with credit metrics and one with delevering.
Okay.
So it's adding two sections to it.
So in the backup, Mr. Chair, in the backup is the debt management policy with those two sections added. So we are looking for approval of this amended debt policy, adding that credit metrics and the delevering portion sections to the policy.
This is delivering what we talked about during the budget cycle, what the commission has requested. It's also something that the Auditor General asked us what was in progress. And when we told them that this was in progress, they put this into their report as well. So they're looking for this delevering policy to be approved. They get it within like 18 months of the report. So that was last December.
And Claudia, I would say it's fair to say that we're practicing these policies that we're codifying here. We're practicing these policies. So we're driving towards these credit metrics. We're driving toward the deleveraging that's described. We're just trying to now get it in policy so that just as we continue moving forward, you have city commissioners change, things are changing, that we're on this roadmap of moving toward more stability.
So at this point, I'll be looking for a.
Can I ask a question? Sure. Yeah. So I have two quick questions, one about each part of the policy. On the part about the credit metrics. So at the top of page 29, it says the goal is to attain and maintain the following ratings, and then you sort of list out. I was wondering if it's, I imagine it's a quick and easy thing to do. If you could just remind us which of those we're currently at and which ones of those are aspirational. I just wanted to be clear on that.
So the debt to capitalization ratio.
I'm talking about where it says attain and maintain the following ratings, and it's got the Fitch AA, S&P AA, Moody's those ratings.
We are AA minus essentially with Moody's. We are A+ with Fitch, and we are A with Standard & Poor's. So the AA rating is I think you used the term is aspirational.
Okay, great. And then the second part down there at the bottom, when you talk about the delevering, and you say that there are essentially four possibilities, four ways that you're mainly considering for delevering. The fourth, or five actually, the fourth one is grant reimbursements. Could you just give an example of what that would look like and whether there's any of that kind of on the horizon potentially? Because when I hear that, what comes to mind for me is like federal government stimulus spending, that sort of thing. Is that on the right track or?
What that is. So for example, I'll make up something. So we receive $1 million grant to put in water lines, right? And it's something that the water system does every year. They're replacing water lines. And you're typically using 50% construction funds, 50% UPIF. So essentially what that is saying, for that 1 million that came in, the 1 million that we would have used in capital, we would set that aside. So we would have essentially spent it anyway for the project, but now we don't have to because now we have these funds that are sitting out there. So it's routing it to debt defeasance.
Okay.
Does that answer your question?
It does, thank you.
To me, the short way to say it, so like when we're saving money, like a grant, we're saving money. We're now just gonna take that money to pay down debt or to not take on more debt.
That's great. That's great.
And we're making sure that's in policy so that we are disciplined to stay and continue to do that for years and years and years to come.
Yeah, I'd make a motion to approve the policy.
Do I have a second?
I'll second it.
Any discussion from the board? Any comments, discussion from the public? Yes,
I can just stand here, right?
sure.
It's Aaron, Claudia. It's great
I'm
to
sorry,
see you.
is it okay if she just stands there? I think it's being
Is
recorded.
that about audio? Like, I know we do have speakers on the ceilings.
Yes, it should be fine. You might want to just come up a little right here. Yes.
It's just over the track.
Can you hear me well? Claudia, good to see you and thank you. And I so appreciate your expertise and your ability to articulate stuff that's hard for a lot of folks. I fully support this. I think getting it codified is great. And I'm being a personal finance coach, building up those cash flows and cash cushions are just so important. So I really appreciate the efforts you've all made to get us on this track and manage and do well with it. So thank you.
Thank you. Right, with that, let's go ahead and, there's no one else. Go ahead and vote. All those in favor signify by saying aye. Aye. Opposed, nay, nay. Is that a nay? Oh, we have a nay. It's not passing, it was one nay.
Okay. I'm sorry, could you remind me? I'm trying to figure this new system out. Who was the name?
So,
Okay, thank you.
okay, moving on to the GRU amended investment policy.
This one's a little bit shorter, but I'll let Claudia take it away as well.
I'm gonna hand it off.
This one's gonna be a lot shorter. GRU has an investment management policy. It's been in place for a long time. We brought an amended policy to the finance committee on August 31st. When they approved it, it has a single change in it from prior years. It adds to the list of non-permitted investments in the policy, Russian and Belarusian securities. We did that to become compliant with city commission resolution on that topic.
So a couple months ago, they passed a resolution, or a month ago.
Actually, it's probably closer to 6 months ago. They passed a resolution asking that for the most part across pension funds as well as operating investment portfolios that we exclude Russian and Belarusian securities from those portfolios on both sides in the operating funds. That change has now been made.
Any questions, comments on this one? Go ahead.
Okay, I'm just wondering, do we have any investments in the?
It's there's no impact to our operating.
Okay, just this one. And I was just going to say, how long will it take us to get out of those situations?
Jason?
What else is on that list of non-permitted investments, just out of curiosity? This is the first time I've come across that. And the reason I ask, this is interesting to me because I've worked both like at the institutional level with other institutions and say my union pension funds and that sort of thing to try and do something similar. And I've always been kind of beat back with this like fiduciary responsibility argument.
Yeah,
I'm not allowed to do that. So it's interesting to me.
maybe I should take a step back and understand that the difference between an operating investment management portfolio and a pension portfolio is significant. For instance, the city's pension portfolio is invested in right now about 75% equities or stocks. An operating portfolio, both on our side of the house and on the general government side of the house, is much more straightforward, much more secure, much more narrow band of investments. It's generally agencies, treasuries, very safe, very hold until mature type investments. The list of non-permitted investments in here is trading for speculation, derivatives, mortgage-backed structures, leveraged floating rate and variable rate investments, things of that nature, currency trading. They're speculative, they essentially speculative items that we would never endeavor in when we're talking about an operating portfolio.
But this is more sort of values-based, it sounds like, right? I mean, or is it because of dangers in the economy because of what's happening? I'm just trying to understand.
You get it on the head first time. This is value-based. This is,
A symbolic
we
statement
don't
of,
like, yeah, we don't like what's going on, and so we're gonna direct you not to invest there.
but this is the only such values type statement that's in there, is that correct?
In this document, yes, there in the past years, in the city's pension portfolio, there have been investiture directions such as years ago, they were directed not to invest in any South African investments. But yeah, in this document, that's the only value.
Interesting. Thank you.
Anyone else?
There've been attempts to make sure you didn't invest in cigarette companies.
Yes.
Yeah, there are a lot of portfolios out there, municipal and otherwise, that have just those types of things. Guns, some are fossil fuels, good investments. Cigarettes, sin tax pieces. So it's not that unusual. It's just that it's not really not really necessary in an operating investment portfolio. We would never even, begin to approach investing in these types of securities for a day-to-day.
If no one else, would someone like to make a motion?
Motion to approve the policy or
I'll
recommend
second-
approval?
I'll second it.
Any additional discussion?
No, I'm just just a general question. Every time we talk about financing, the background is always being able to go to Wall Street and secure more debt. Do we have any sort of real simple English description of how much debt we can be eligible for? I know that has gotten kind of low because we've been so leveraged, do we have any description of that?
Yeah, it's coverage ratio based. In other words, it's a ratio of net revenues to outstanding debt, and we are quite honestly nowhere near that capacity.
Can you give any idea? I don't know, 20% or 10% or something?
The ratio is we have to have at least 1.25 times net revenue to annual debt service. My guess is don't quote me on this, but that number is probably somewhere around
50%. To my ears, that's a big number.
Well, remember, and Ms. Rasnick pointed this out, we've got, you don't want to tie your hands. We've got $3 billion worth of plant and service out there. We've got close to $2 billion of net capital assets. We are always going to have to access capital markets to acquire, build, maintain the level of infrastructure we need both to service the needs of our customers and to generate revenues to pay back that debt. So while I believe probably all management policies have those, or resolutions have those limits in there, they are intentionally structured not to unduly tie your hands if you need to access markets for capital.
That leaves a lot of wiggle room at that rate, that percentage.
Yes. Yes.
Wall Street was mentioned. I'd like to talk a little bit about our investors. So the people that invest in the utilities debt, there are like life insurance companies, for example, they're looking for long-term steady returns for, future payouts. Those are the investors that look for basically boring utilities like us, right? The banks and bankers, professional advisors, bond counsel that work with us through the process. But when we're talking about Wall Street, there's real companies on the other side trying to deal with things that are happening on their balance sheet, right? Their income statement and then future projections of what they need that cash to be. It's an interesting market. So I think a lot of people say that we're working with Wall Street, but we're really working with real people on the other side because they need long-term stability, and we can provide it just like other utilities. And we are also obviously higher credit ratings than some of like the corporations you see out there. They're issuing bonds and debt. So just as a reminder of that, we work with very real people when it comes to a rating agency. They're sitting in a chair just like us, right? They're on the side of the investor, and then the investor, for example, it can be MetLife, right? And those are very real people trying to balance their workloads as well. So we're trying to maintain the capital infrastructure at the utility, working with a rating agency person that's sitting in a chair, talking to an investor that's trying to deliver things for their company as well. And it's a very stable process as you move through time. It is stable. I'm crossing my fingers like this, considering what's going on in the market right now, but it's a very staid process. We're pretty boring at the end of the day. The number's just large.
Thank you. But before we open this up to public comment, just real quick. So, I'm sorry.
No, I was just gonna say, so what you're really saying is, the people that are generally holding GRU debt are government pensions, union pensions, generally, life insurance policies, and not like day traders.
So not so sure about the pensions, right? But it's usually companies on the other side that are with XYZ, not day traders. Those companies don't day trade in bonds. You can't, yeah,
Okay.
it's not like cryptocurrency.
Right. So generally the people we're talking about, the people who are long-term investors that aren't looking to make a dollar today off of GRU debt.
Exactly. That's exactly right.
A cryptocurrency, that's where GRU jail.
Non-permitted investments.
All right. Anyone else from the board? What I was just trying to say, on this last vote, it was non-unanimous, which is fine. Actually means it might be a little more interesting, but just a personal request. If you're gonna vote against a motion, I would like to hear from you, just to see, maybe you have an interesting point, and I haven't thought about it. Not a requirement, just a request. Anyone from the public wish to speak on this item? Hearing none, all those in favor signify by saying aye. Aye. Opposed, nay? This one's unanimous, Brian. All right. Moving right along, now we're going to the really interesting one.
So,
Resolution authorizing amendments to swap transaction, et cetera.
So, Mr. Chair, the two items we just went through were items that were taking to the City Commission October 20th for approval. This item we actually took to the City Commission on the 6th. As we were working with our financial advisor, there were some reasons we needed to kind of get it moving it forward. So the City Commission did approve these financial transactions, which are really, Mark will talk about a little bit more, but kind of give us delegated parameters in order to move and take action. And so they're going to go through these. I just wanted to let you all know that we already received City Commission approval. We will not be going back to the City Commission with this item, but we wanted to make sure that you all saw what we had and what we executed.
Just so I understand, are we going to vote on recommending this item?
This item, no, it'll be just to hear.
Just information.
I guess we do have in here authorized, but we already took the action, so I don't think that.
Okay, well, Claudia mentioned pouring utilities twice in the last few minutes or so. So this is where I come in these types of presentations.
You're bringing the evidence that really is boring.
Oh.
Hey.
5 minutes. Yeah.
So I think everybody's aware of the fact that next month's Federal Reserve has taken some actions to raise short-term interest rates a number of times, and sent some signals that they're going to continue to do that over the next few months. So that has created somewhat of a dislocation between the bond and swap markets. Bond markets reflect what current interest rates look like. The swap market and the swap curve is a reflection of what the expectation of future rates is going to be. But that dislocation has created some potential opportunities for the utility to do a couple things. Add some certainty to a borrowing that we plan to do next spring for a new money issue, and perhaps to generate some near-term savings in the next few months. Those opportunities come in the form of three different transaction proposals. One is amending some existing forward-starting swaps that we have on our Series 2014A and 2019A, with the goal of creating an upfront payment from the counterparty that we would use to fund capital projects and reduce future borrowing. The second one is a cash-settled forward swap. It's related to that spring borrowing that I just mentioned. We believe the interest rate environment we're operating in now will be preferable to the one that will be in place next spring, and so we're going to try to lock in some current rates. And then the last one is another swap amendment on existing swaps, our 2017B and 2020B. The goal again here is to generate an upfront payment from our swap counterparty that we would then use to defease some of those 2017 and 2020B.
So before we move on, just for my own, when you talk about doing a forward swap, what I see we GRUs, Gainesville, getting money. What's in it for the counterparty? Why are they?
Well, the counterparties that we deal with have, first off, they're not taking any risk. Counterparties we deal with have, I don't want to exaggerate, they have billions of dollars of these swaps on the books. When they take a position on one side of a swap with us, they're laying that position off against another counterparty on the other side that wants to move their rates in another direction. They're getting a little credit spread from us. They're getting a credit spread on the transaction from the other side. So that's where they're making their money. They're not betting that interest rates are going in one direction or another. It's kind of like, I'm going to be flippant, but it's kind of like, what we're always talking about in Vegas, the house always wins. They're not laying bets. They're essentially, they have compliance departments that work every day to make sure that their books are relatively balanced. If they've got some money short, they've got money long. So they're happy to engage in these transactions with us. Our role here is because we get these things pitched all the time. I think sometimes commission and maybe the board thinks we're bringing every opportunity that gets passed in front of us forward for consideration. It's our job to look at these things and understand that the banks that bring these forward do it for a reason, that they're making money. What we need to make sure is that the transaction makes sense for us as well. That while they're making a little bit of money on both sides of the transaction, that we're saving money.
Mark, if I could. So the swap market, it's massive. So you're talking like trillions of dollars that are out there. The banks that we deal with, so when we hear the term like Wall Street, everybody thinks Wall Street's not good, but these are banks that build relationships for a reason, right? They are designed to make some money, because let's be fair, but it's also building that partnership with whoever their clients are to continue that business going forward. And it helps us in the long run when we're looking at what's happening. The market changes, right? And some of these products change as well. They change on a constant basis. And so they're looking at that. They're looking at how it's attached to their clients and how they can essentially provide that benefit, because it does benefit them in the long run to make sure that we are having those positive pieces on our side. So it's not like, so when we talk about day trading, for example, it's not like you can go out and just enter into a swap transaction with somebody you just don't know. It doesn't work that way. It's not like you're going to go out and buy an option on Apple, right? It just doesn't happen that way. It's a smaller market with lots of dollars in it. And those relationships with the utility have been there for a really long time. We have well-established relationships with banks. When you hear like Wall Street banker, these are again, people that are sitting in a chair, working with their clients. Just like when you go into a bank and try to apply for a mortgage, a car, or whatever, you're working with that banker. You want the best possible deal that you can get with the credit rating that you have. And that's what this is doing. I just want to bring it back. We said a lot of stuff here, but at the end of the day, it's people on each side of these transactions that are trying to move through time. But we're also trying to deal with is a LIBOR transition as well. So it's essentially one of the interest rate indexes. And so the bank is saying LIBOR is going away. We've got to move our client to something different. So they're helping us get to something different. So, thank you.
Thank you.
So, I outlined, we have 3 transactions. We currently have 2 forward start swaps, 14 days and 19 days. And we entered into these swaps at the beginning of the pandemic to take advantage of historically low interest rates on swaps whose cash flow exchanges don't begin until the initial call dates of those underlying bonds. So for 2014, that'll be in 2024. 2019, that'll be in 2029. The way these swaps are structured is when we approach those call dates, we're going to have 2 options. One is we're going to terminate the swap before the flow is ever begin. And then issue based on how interest rates have moved. And we issue new fixed rate debt to refund the old fixed rate debt. The other option is that we will enter into the swap, we'll continue it, we'll issue variable rate debt and refund the outstanding series of bonds so that the swaps that are in place with variable rate debt. So the swaps are in place will essentially hedge that new variable rate debt. So since we've entered into those transactions, the interest rates have risen significantly. And what that's done is created positive mark-to-market value for the utility. And all that means is that the variable rate that we receive from the counterparty now exceeds the fixed rate that we're paying to them. And so there's positive mark-to-market value. And what we want to do is amend these transactions so that we can extract some of that value. Essentially that we would do that by agreeing to increase the fixed rate that we are paying to the counterparty slightly, probably maybe at the max by 0.5% in exchange for an upward cash flow payment from the counterparty. The new rate that we would enter into would be established at the time that we make the amendment. We'd still be able to lock in the savings that we're going to accrue in 2024 and 2029 when we refund those bonds. And we've got all the optionality. We would have all the optionality after this amendment that we have today. Essentially, on this one, it boils down to taking a piece of that positive mark-to-market value, pumping up our fixed rate a little bit in exchange for getting some of that money up front, which we would then use to fund capital projects, which would reduce our future debt. This one's a little more straightforward. We believe we're going to have another debt issue in the spring of 2023 from new money. We like the interest rate environment now. This is the one we believe is going to be in place next spring. We want to lock in the rates that we're looking at now, and we would do that by using that dislocation in the bond and swap market to enter into a forward or delayed swap. It would allow us to set those rates today and mitigate some of that interest rate risk that we would entertain if we just waited to do the bond issue in next spring. So that swap would be based on today's rates and terms. It would be structured so that it would terminate on a predetermined date that coincides with the issuance of the new bonds. The interest rates are going to move between now and next spring, and based on that, that's going to create some value in the swap. When we reach the termination date, there's going to be a flow of funds between GRU and the counterparty. If rates have risen, we're going to receive a termination payment, That will be offset by the fact that we're issuing debt into a slightly higher interest rate environment. If rates have fallen, then we're going to make a termination payment, but we will benefit by the fact that we'll be then issuing debt into a lower interest rate environment. At the end of the day, the net effect is that we're essentially setting the rate for that bond issue in the spring of 23. We're setting that today by structuring that swap. All right, this one's a little more problematic. It's a swap. There's a little soft put on two existing swaps that we hold now. I'm sure you're all aware that back in 2017, we issued 3 series of debt. One of them was $150 million in 2017 Series B bonds that helped finance the acquisition of DHR. These were variable rate direct placement bonds, which meant we placed them with a single bank. And that was with Wells Fargo. Since then, we've broken that bond into 2 pieces. 45 million of it stayed with Wells Fargo. 105 million of it went with TD Bank because they give us a much more aggressive rate in restructure. So like I said, these were variable rate direct placement bonds, and so to manage the interest rate risk associated with variable debt, we entered into two fixed rate swaps that were aligned with the pieces of those bonds. One of the swaps is $105 million with Goldman Sachs. The other was $45 million with Citi. So essentially the same thing is in place. There's market value associated with these interest rates. We want to extract some of that value. So to do that, what we're going to have to do is we're going to propose eliminating the cash flow exchange for a period of up to 4 years with the counterparty. We would do that by reducing the notional amount of the swaps from $150 million to 0. In exchange for that, the counterparty would give us an upfront payment. We use that upfront payment to refund a portion of the 2017B and 2020B bonds. We would then issue fixed rate debt to take out the balance of the 17Bs and 20Bs. At the end of that suspended period, that 4-year period, the swaps would resume. We would issue variable rate debt to take out the existing fixed rate debt. That variable rate debt, the interest rate risk associated with that would be hedged through the resumption of the swap. I think the general manager mentioned that we have delegation parameters around these transactions. When we entered into the 2020 transactions with the commission, we went and said, give us the authorization to negotiate and execute a long series of transactions. We'll give you some comfort in that we'll have specific delegation parameters that we cannot execute past. And we've done the same thing with these transactions. So the delegation parameters for the 14A and the 19A swaps, the interest rate, the fixed rate that we'll pay will be no more than 2.5%. The upfront settlement payment that we would get in exchange would be no less than $1.2 million on the Series 2014A swap and no less than $5.1 million on the 2019 swap. And the trade date, essentially the authorization, gives the general manager the right to negotiate and execute up through December 31st of 2023. On the cash settled forward swap related to the 2023 bond issue, the notional amount of the swap won't exceed $75 million, and that was set based on the fact that we don't want to hedge any more than 50% of that bond issue, and we believe at its outside limit, we're looking at borrowing $150 million. That early termination date will be later December 31st of 2023. And that termination value will be based on a fixed rate payable by the city, not to exceed 6%, and a floating interest rate based on secured overnight financing rate. That's SOFR. You mentioned that the industry is transitioning from LIBOR based indices to secured overnight financing rate. We've also got language in there such that if any other index becomes preferable to that in the interim, that we can enter into that based on recommendation for the city's financial. Termination payments on transaction would be subordinated to that, so we will not sit on parity with our existing bonds. And we've got execution authority through September 30th. And finally, on the 17Bs and the 20Bs, the upfront payment would be at least 1.3 million on the Citibank swap, $2.7 million on the Goldman swap. As I mentioned before, the notional amount of the swap will be reduced to zero for a period of no longer than 4 years, and during that period, which was reduced to zero, there'll be no cash flow exchanges between the two forms. And then the authorization for the general manager to negotiate would expire on September 30th.
That's it. Any questions, comments from the board? Any from the public? All right, well, thank you for the presentation.
So thank you. As we said, we don't need approval on that. If we move to the next item, the last item. So the last item we had, I'm going to invite up Rick Hutton. Rick Hutton is one of our supervising engineers. You may have met him before. Works primarily with water and wastewater. He is going to talk tonight, and I don't want to go too much into his presentation on the consumptive use permit. We currently have a 20-year consumptive use permit. We are looking at updating that, renewing that permit and extending it. Rick will kind of talk to that topic and be able to answer questions.
That's gonna be a tough act to follow, Rick. I don't know.
Or we keep talking about swaps.
Wow, wastewater.
My favorite topic.
After hearing about boring financial, well, our finance people last.
Yeah, now you can talk about it.
There's a lot of commonality though, and you heard a lot of discussion about, hey, setting ourselves up for future success. And so that's a theme here with my presentation too. So this is talking about the Murphy Water Treatment Plant. Sorry, I forgot the T, Robin. I mean, that was my fault.
I didn't even notice.
I forgot the T. But I'm going to talk about our consumptive use permit renewal extension. Is something we're going to be bringing to the City Commission next week. Primarily, this is an informational item, although there is one City Commission action that we're asking for, which is to source justify a particular consultant to help us with the technical work that's going to be required with the this renewal or extension. So first I want to start out with giving you a little background and lead it to what is a consumptive use permit and then why we want to do what we're doing. And so we provide water service to the community, about 200,000 people. Our community has been growing at a pretty steady pace for the last 30 or more years. Based on that growth rate, we expect to get another 50 to 60,000 more people moving in and needing water service from us in the next 20 years. Most of our water customers are also wastewater customers, so we get most of that water we send out, most of it comes back to wastewater. We collect it, we treat it, we beneficially reuse it. We actually are able to beneficially reuse 100% of that water. And we have a longstanding goal of the triple bottom line of sustainability: environmental, financial, social sustainability. So what is our, how do we achieve sustainability related to water? And so our overall strategy, one is planning and collaboration. So like most other areas of the state, water supply is an issue in our region. So having enough water to supply water users as well without having undue adverse impacts to our water resources, springs and rivers and lakes. So there's a lot of planning. There's water management districts and Department of Environmental Protection do a lot of work in planning and regulatory policy and what goes along with that. So we stay very much engaged with that and along with them and other stakeholders. Of course, water conservation, big important part of our overall water strategy. And I mentioned beneficial reuse of our reclaimed water. And of course, I never miss an opportunity to put sweetwater wetlands up there. And then the other project we've talked about before is this new recharge wetland project we're doing. Those are some examples of how we beneficially reuse that water.
So Rick, just real quick for the newer members, Sweetwater Wetlands Park, I don't know if you've all visited that, but you don't get to see it from this angle very much. It's actually designed and shaped like a gator head. Engineers actually got creative when they did.
Yeah. So I'm changing gears a little bit and talk about our water supply. So our water supply comes from the GRU Murphy Water Treatment Plant. We have 16 wells into the Florida aquifer. We are now pumping about 21 to 22 million gallons per day on average. The withdrawals are regulated under this consumptive use permit that I talked about. It's issued by the St. Johns River Water Management District. We're permitted for 30 million gallons a day on an average daily basis. So a little more about the consumptive use. What is the consumptive use permit? I think I mentioned. So for all larger water users, which include municipalities, larger agricultural operations, industry, anybody that's got a well beyond a certain size, you have to get a consumptive use permit. These are usually 20-year duration permits. They primarily regulate how much water you're able to withdraw. And so a big part of what the water management districts are charged with doing is making sure that the amount of water being withdrawn is not causing significant harm to natural resources. And so there are some metrics that they use to measure this. And significant harm actually is a legal term. And so it has a specific meaning to it, but they use different metrics to measure that. If you're by the coast, saltwater intrusion can be a factor, not so much here. Wetland impacts, and then there's a regulatory criteria called minimum flows and levels, which is particularly important to us and in the region. And so, okay, so now what is a minimum flow and level? So what that is these are regulatory criteria that the water management districts set individually for individual lakes, rivers, and springs. And so the intent of that is they do a fairly detailed analysis to try to figure out, well, how has this water body endured significant harm due to pumping? And significant harm usually means, is it causing an ecosystem shift or other unacceptable impact, or is it projected to have significant harm to it? There's quite a bit that goes into doing the technical analysis, a lot of field work, use of groundwater models, and doing a lot of projections. One of the challenges that's really difficult is that everybody kind of knows is we have obviously cycles in rather dry, and those dramatically affect lake levels and river flows and whatnot. But so you have to, when you're trying to figure out how much impact are we having from pumping, you're having to try to figure out, well, I have to separate that from the impact that's happening from just the normal weather variation. So they often tend to be very controversial, these MFLs. So, how does an MFL affect water users? So, one of the things that will happen is if there's an MFL or water body that is projected to either have had significant harm or may have significant harm, then there needs to be a plan that the water management districts adopt that they call either prevention or recovery plan in order to prevent that from happening or recover from the damage that's already occurred. And so where we are affected by that is if you have a consumptive use permit, you are going to be required to either mitigate your impacts or reduce your demands. There's several different kind of ways of trying to do that. Reduce demand, you may be coming up with an alternative source of water to meet your needs, water projects. And in some cases, if you don't have a project of your own, there may be some regional project that you can participate in, which is kind of important. So some MFLs that are important in our area. This is 20. Oh, yes. So here we are. This is our Murphy well field right here. And so the Lake Brooklyn and Geneva over in Keystone Heights to the east of us, those lakes are very sensitive to aquifer levels. Those of us have been around for a long time, and I remember well back in the 1960s and 70s, those lakes were full of water. People were skiing out on the lakes. During the late 90s, early 2000s, they were very low levels. Well, they recovered to some extent, which has been in a pretty rainy period the last decade. So they are very sensitive to aquifer levels, sensitive to pumping impacts. So there are adopted MFLs for those lakes. The Santa Fe River also, we talk about Santa Fe River a lot in our community. There is an MFL that's being developed for the Santa Fe River and the Kentucky River it's being developed at this time. And so those rivers are also impacted by regional pumping. So how are we meeting these MFLs? Important point. So of course, conservation's helped us with reducing our pumping rates. I talked a little bit about our recharge project that really helped to a lot of that water we would draw, we end up putting back into the aquifer, which really reduces our environmental footprint. So that helps a lot. But with Lake Brooklyn and Lake Geneva, even with our conservation and our recharge projects, we were not able to meet that MFL. So that's the bad news. The good news is that the St. Johns River Water Management District developed a regional project, which they are in the design process right now, are actually about to start construction. That it's called the Black Creek Water Resource Development Project, and they asked us and other utilities and other water users to participate in the cost of this project. So back in 2021, we agreed to apply and basically developed an agreement with them that we would contribute $2.7 million towards that project, which we've been doing that in 2 payments. We made the first payment already last year. Actually, we're scheduled to make one this year, but the district has asked us to wait until next year for that payment. But in exchange for us making that payment, we basically get signed off on, you have met this MFL. So it's a really good thing from our perspective, from a business perspective. So we're not responsible for executing the project. We paid into it. We've met our obligations. So, the project, as I understand, they recently awarded the contracts with the construction on that. So that one of the things that we saw when we made this agreement is that we were going to want to go in for early renewal or permit to kind of lock in, the benefits of what we've spent our money on. So that's kind of the plan on Lake Brooklyn and Stephen. What about Santa Fe, Lower Santa Fe and Itchitucky River? So that MFL is under development now, not yet finalized, but because our recharge projects tend to be closer to that area, we feel like we will be able to meet the MFL with our recharge projects, and particularly that new recharge wetland project we are doing. We think that is going to be very key in meeting that. And so part of demonstrating that we meet that MFL involves a lot of groundwater modeling. So we actually had to work with the water management district, both the St. John's and the Suwannee River Water Management Districts, to develop a sub-regional scale groundwater model that sort of demonstrate that we are going to be able to meet that MFL. We're very close to completing the groundwater modeling that we need to prove it out. So I told you, I gave you a really long introduction lead up to what is the deal with it, why are we renewing stuff? So this concept use permit was issued back in 2014, it's a 20-year permit, so it doesn't expire until another 12 years from now. It is based on a 30 million gallons per day annual average, as I mentioned before. That when we made that renewal back in 2014, that is the same allocation we had in our previous permit. So it was a really good testament to the conservation that we in our community have achieved, and the fact that we were able to get that permit issued back then for the same allocation we had before for another 20 years. So we are proposing to then extend or renew. I'm not sure exactly, there's a difference in the mechanism, but we're going to figure out exactly how to do that. But it'll be either an extension or renewal to extend it out to 2044. So another 10 years.
So the reason we want to do that is really, again, going back to that, ensuring our long-term community water supplies. Well, that would give us much greater assurance. We can go out for folks that will come after we retire will really thank us for that. It builds on the work that we have done and the $2.7 million we spent on the North Brooklyn Bermuda MFL and on our wetland project that we're doing. And, that's why we want to do that. And so our intent would be to initiate the process in 2023 this year and get it done next year. There is quite a bit that goes into doing this type of permit renewal. You have to demonstrate what demands you're going to have. Talk about demonstrating that you're going to meet these MFLs and other parameters. Monitoring, so we will have to have a lot of modeling. So what we are proposing to do, the ask that we have from City Commission, and then hopefully you also endorse that. This particular company, Liquid Solutions Group, has been really all the work that we've done in groundwater modeling and getting demonstration of our really all these MFLs we've been working with particular companies that are really up to speed with our situation and done a lot to develop the models and things that we're needing. So we're going to propose that our action that we're going to ask for commission was authorize the general manager or his designee to execute agreement with the Solutions Group to provide the professional services in association with doing that.
Any questions on? John.
I see the withdrawal rate, probably, I didn't see any rates of what do you call it, reclamation, what do you call it, putting it back in.
So it's about 70% or so. So we withdraw, we're doing, well, actually we're withdrawing about 21, 22 million gallons per day now. We're actually treating about 16, 17 million gallons per day.
And all of that goes back in. Yeah, either through wetlands, we have a deep well recharge. All of that's getting back into it.
So what would happen one day, if all that reclamation stopped? Because the only thing they've gotten for is what you can take out of the ground.
So what do you mean if that's stopped? We stopped treating wastewater?
Yeah. Nothing you would, but
We got
what happens?
Yeah, I mean, so that's always gonna be generated as long as we're treating wastewater community. But I mean, if we weren't recharging water back in the Florida aquifer, that would have a tremendous impact on our ability to withdraw. Because we're basically, I mean, think about it, we're kind of recycling our own water to a large degree. At least 70% of it, we're kind of have a local water cycle that's happening. If you take away that component of putting it back in the aquifer, we would not be able to have a consumptive use permit of 30.
Our impact would be 3 times greater.
Great, Jason.
Couple questions. That 30% that's not being put back, does that include so irrigation? Like
That's
what
what it
that's okay.
is.
So a good chunk of that is also going back into the aquifer.
Some of it is. I mean, those are pretty rough numbers, but that's kind of making a fairly conservative assumption, saying, well, most of the irrigation water doesn't get back, but that's not really true. Some of it does recharge. Also, some of our water, our potable water, UF is a wholesale customer of ours. So some of the water, about 1 million gallons per day, goes to UF. Now they have their own wastewater treatment plant. They do a lot of reuse. So as you might know, all of their grounds are irrigated with reclaimed water, and they also have a recharge well too.
So we provide them water, but they treat their own wastewater. Some of it's recharged, some of it goes to reclaimed water. But yeah, roughly we assume that we don't take credit for that irrigation water getting back in. And Barry will tell you too, evapotranspiration is a lot. So like when you irrigate, a lot of that water doesn't actually get back in. Evapotranspiration will take it up into the atmosphere. And so we don't show that as credit, but some of it absolutely does get back.
And the extension or renewal, that's still going to be based on the 30 MGD?
Well, we have not made a determination on that. So one of the things we need to do is really go back and look at our projections really closely. And one of the things we really need to do is look at development trends. And so where do we see a lot of times you do these calculations based on per capita, per person water use. And so it's going to take some analysis to kind of look forward and say, all right, what do we think the per capita water use is going to be? And there's a lot of complicating factors like, well, I mean, we've been able to reduce that per capita pretty dramatically particularly since about 2007. It is really, we've reduced it by like 40%. So are we going to be able to keep reducing the per capita? Also, there's trends in different directions. So another trend is newer development tends to have more irrigation systems. It's kind of a standard thing, but on the other hand, newer development, the most recent newer development tends to be smaller yards, smaller irrigated areas, and we're seeing some trend towards not necessarily everything a single family neighborhood. So I think we need to really kind of sharpen our pencil on that because you bring up a good point. So, you know, are we comfortable with this asking for 30? Well, we need to make sure we are comfortable with that. If we're going to ask for more, we've got to justify that.
And that's part of the conceptual use permitting process. You have to, not only do you have to determine what that is, you have to justify that to the water management district. That's part of, like, they make sure you're not just saying, hey, we need twice as much water and then allocating it. You have to give your rationale and demonstrate that as part of the permitting process.
One of the things that I'm most proud of about this community as a whole is exactly what you're talking about, the job that we have done in water conservation in this community. And I mean, GRU has been a big part of that for a long time, helping people conserve water. And so I definitely, for myself, hope that will remain front and center for planning moving forward, is what we can do to keep our per capita and hopefully improve our per capita consumption moving forward.
Well, let me comment on that. I'm sorry to break in real quickly. This is an important point. So it's difficult from a business standpoint to encourage your customer to use less product, right? Very few businesses, if any, besides us, do that. For water, there's a really good economic reason to do it, actually. So from a water perspective, our next unit of water, just from a business standpoint, is going to be a lot more expensive than what we've done historically. Groundwater, utilizing high quality groundwater, which we're blessed with in North Central Florida, and providing that as your water to customers is a really inexpensive way to provide water. The next unit of water is going to be a lot more expensive. And so the longer we can stay in groundwater economically, that's going to be better for our customers. So it's economically beneficial, actually, to try to have our customers continue to use less. And so, we're going to continue to drive that. And that's only looking at economics. Then, as Rick was saying, the three parts of sustainability, it's also better environmentally to have that smaller footprint, and then ultimately for the end customer. And so that is always going to be part of our strategy going forward, and we're going to do that as much as we can. But Rick did talk about, you squeeze that sponge, and toward the end of squeezing that sponge, they're just not, it's diminishing returns. The curve has a long dragon tail. And so, if we got a lot out of that sponge, I'm not sure how much is left in terms of per capita water use. But that'll be what we're trying to demonstrate.
Yeah, I always appreciate when you talk about it in that paradigm. And as I've mentioned before, I think we need to think of that same paradigm in terms of energy, because the next unit of energy in terms of planetary cost is going to be incredibly expensive. So last thing, the real central question here, right, is that you're asking us to support is the working with the Liquid Solutions Group. And I'm just curious, I mean, $300,000 to me is a big price tag. And I'm just wondering how something like this works in terms of like bidding type process, because it's like essentially what we're saying, it sounds to me, is like, we've worked with these guys, we like them, we're going to continue using them. But what are the ramifications of that in terms of like, well, maybe there's somebody else out there that we might also like that would do it for half as much. So how does that work as far as like, here we are approving this or recommending approval of this?
So, and part of what our intent would be is, the way we usually work these contracts, you have a contract that says up to, but we have to do task assignments. So actually, we're executing want to execute a task assignment with them. I think it's on the order of $50,000. So how much of that we actually have to spend, it depends a lot on what the Water Management District requires us to do and how much work it requires in that sort of front end process. So hopefully it's a lot less than this, but also, but you know, we're going to include some groundwater modeling. We've got a lot of that done. So hopefully we don't have to do a lot more of it, but at the point we're at right now where we haven't engaged with the district yet, we're not quite sure what they're going to ask for. So part of the motivation for asking for the higher cap is kind of a worser case scenario. Like, okay, well, what if we have to do a lot more modeling? What if there's going to be a fair amount of work we're going to do on trying to project future demands? That's another issue. And the other thing too is while we're doing some of this work, we want to do some long range planning beyond 20 years. So we talked about the next increment of water. So actually part of what we want to do is, well, what would be the next increment of water? And so there is some degree of planning beyond 20 years that we want to accomplish over the next year. So
Let me take a shot. I think what you're asking is, well, if you put this out for competitive bid, are you going to get a much better price? And so why we're asking for source justification and not doing that really comes down to probably two main things. One is the scope of it, as Rick's describing. We know some of the scope, but this is an iterative process with the district. So like when we got the consumptive use permit in 2014, it was about a 2.5 year process of going back and forth and show us this, show us that. So you don't have this clear scope that you can say, here's the scope, how much would you do it for? How much would you do it for? So that's one of the challenges. But the other reason for the source justification is they've already got some models of our system that we've already paid them to build. They've already got a ton of experience of how we operate and working with the Water Management District. So they're actually the most efficient consultant that we could have. We're leveraging the value we've already used them for we're leveraging all of that, what we've already invested with them. And so that's the primary reason what the sole source justification.
Teresa? I think you were next.
Okay. I have a couple of questions. When you talk about the Water Management District, now right there in the well fields and in our area, we cross over both St. John's and Swanee River. So we actually have two water management districts that you have to go through, right?
that's correct. I mean, so
You guys were just saying one, and I don't think a lot of people realize how complicated that part is when they both have different.
Yeah, we have the pleasure of having two.
You live on the corner of both.
St. John's is the one that actually issues our permit, but since we are right on the border, both of them sort of work together and.
Work hard.
Well,
We've gotten agreements to have them work together and have Swanee like basically say, you do the permitting, we'll be a part of it, but you ultimately will issue the term permit. So we have gotten agreements between the districts so that it is.
But it's complicated.
They
Absolutely.
both have to be happy.
Right. And the other thing was with the irrigation and new construction and water conservation and LEAP. I just wanted to put out there that is LEAP addressing any of the conservation or consumption in the existing homes with the older toilets, with the bad plumbing and things like that, and irrigation for new construction and water conservation. I have seen in many places. The trend is now towards these super shower, not water saving showers, but this shower rainforest bathroom, and not one, but 2 or 3, even in small houses. So are we addressing any of that for the future build outs that are coming? And how would that affect the water use permit? Because when you're talking, some of them showers have a humongous amount of water. They go sideways, up, left, right.
It's a car.
Right. You basically running through a car. So how could we do something maybe with rebates or conservation minded for the newer construction coming at us.
That's something we want to look at.
What was the first one? The first thing, I'm sorry. Oh, yeah, so LEAP. So do you want to talk
So
about?
the toilets, low flow and
So
stuff.
we actually got some grant money from St. John's Water Management District to include retrofitting toilets when we.
As part of the LEAP.
Part of the LEAP program.
The new program now.
One thing we were kind of surprised though was that when we went into the LEAP homes that most of them had generally the low, didn't have the old high flow toilets.
We did some of them a while back under a.
Yeah, so when I mentioned that 231 homes had their pre-inspection, part of the pre-inspection is looking at the flow rate of the toilet. And if it's the higher flow rate, then we have a grant that can, water management to replace those higher flow rates.
Now, I'm just gonna say some of those older low flow rates have to be flushed 2 and 3 times. So even though they might be low flow, they weren't good out. So you would have to flush them 2 or 3 times to actually clear the toilet, the original low flows. So you might not be getting the best out of that.
Yeah, maybe that's something we can look at in our pre-inspection.
You know what I'm talking about, how some of them won't.
Some utilities just give people a brick, you know. with a brick in that.
Then you do have to flush it twice, yeah.
I've got a quickie and a long, for a quickie, you talked about the well field, where it is now, near the headquarters building. Where is that second one that you mentioned located? I'm not familiar.
Well, re-injection, is that what you're talking about, the deep well?
So we only have one production well field. It's at the Murphy Water Treatment Plant.
You said there was another one that you were.
The other one is not it's not withdrawal wells, it's recharge wells. So it's taking reclaimed water that meets drinking water standards and we're putting it down into the ground.
And where is that located?
That's at the Knappahall plant.
Okay, so in UAB, we talked about Canapa before. I just didn't know you were referring to that. Okay, but the other question is a little longer in duration. You talk about the 30 million gallons per day that were permitted now. What is that number? In other words, if you had really remarkable population growth, let's say in Alachua, or industrial growth or hospital growth as it is, or all the subdivisions that the newspaper keeps talking about in the West and so forth. Is that 30 million gallons per day something that could easily rise, or is that pretty strictly capped because of the whole environment in the entire district?
I'll give you the short answer. I'll let Rick give the long-winded answer. So it could definitely rise. If we have massive growth, the 30 million gallons is just that is the permit that we received back in 2014 was up to 30 million gallons through 2034. And we've done growth projections, looking at the Bureau of Economic Development, like their numbers, and looking at, okay, we get this much growth in Alachua County and this many people, and this is how many each person uses. Here's where we end up. And that 30 million gallons was enough through 2034. But if growth rates change, people talk about with climate change, if people start coming off the coast and they all want to move to North Central Florida, then those old graphs of what growth looks like might be very, very different. And so the cap could definitely go up if growth rates are very different than what we're currently being.
But the water is there in the ground if it needed to go up, then.
Go ahead.
Two sides of the equation when you go into talking to the water management district about your water use permit. First, Tony just talked about, you have to justify your need. And then the other part is you have to show you're not causing significant harm. So if we had a much greater growth rate, then we're like, oh my gosh, we're going to need more than 30 MGD. We would go to the district and say, hey, look at we're having all this growth. We can justify why we need more water. So that's half the equation. And the next question is okay, can you demonstrate that you pulling out more water is not going to cause a significant harm? And that is a more difficult issue. Although, one of the things we would go back to is, well, we got to look at what we're doing in terms of recharge and other projects to sort of offset those impacts. So we would have to go in and say, Well, yeah, we're having to withdraw more, but we're also doing more to offset our impact. So, you know, we have to be able to demonstrate technically that, that we're not that we're able to offset our impact so that we're not causing the significant harm, which is not necessarily easy to do.
Teresa, yeah.
On that account, there is a project that's being projected for 121 that's right on top of the well fields that is supposed to be 15,000 units. And so what would 15,000 units be an impact on the gallons per day?
Property.
Mhm.
So one, I just want to clarify, it's not right on top of the well field. Yeah, we have but to that point, we have a 7,000 acre conservation easement over the well field that does protect the well field and the future of the well field. But yeah, I mean, I think so right now what's happening, I don't think there's a project being proposed right now. There was a change in the zoning and the density requirements in that area, but there's nothing specific. I mean, that project's been around for the development. The idea of development's been around for a long time, but there's not a specific project being proposed. But when something like that comes on, typically it comes in over time. So like those units would be coming in, whatever, 1,000 a year or 800 a year over time. And that is built into the Bureau of, I'm not saying, what's Bieber? Bureau of
Economic Business Research.
Business Research, there you go. Bieber's kind of projections take into account those types of things, but you could have a disruption where you have numerous of those developments come. They're just not being projected at this time.
Well, for example, we're talking about the water and what we have in the state. At the peninsula part on South Florida, they already have saltwater intrusion way into all their well fields. So what they used to use down there, they are now sucking from here. Orlando's growth has been exponential. They're taking more water. So even the water that we had running under the state, which comes from out of Georgia down under the aquifer, we are sucking at massive amounts going down to South Florida. And a lot of people don't understand saltwater intrusion is real. It's happening all over the state, all the coastal areas. So now they're pulling more from this little aquifer channel we have going down the state. So imagine the Grand Canyon under us. And that's what we have going on with the amount of pumping of water south of us. So the more they pump out, the less we're going to have here too. So it's not just a matter of what we use, it's a matter of the whole state growth doing the same thing at the same time, sucking the water down. So that's what makes this even more complicated when I sit here and I hear, well, this is our use, but I know south of us, it's greater than anything we could even think of.
And just, it's not quite as bad as that. And so
Yeah.
I used to, in a previous life, do watershed modeling, develop some of these models. We used to think that a lot of it came from Georgia, and most of the stuff is actually fairly localized. So there is some of that happens, but not to a huge extent, but they are definitely going to be sucking.
Well, they're not bringing fresh water in from South Florida, they're bringing it from up this way down. Through Orlando.
It's more in your region. It tends to be more regional. So like most of the recharge we're withdrawn from is regional rainfall. I
Because
think
we have regional rainfall. That again is the next part of that.
Yeah, good point. What I think statewide, there's a lot of challenges with having enough water supply and a lot of, peninsular Florida, in most areas, it's kind of, in a lot of cases, we've more or less reached the end of the cheap water.
Right.
And being able to just say, okay, the utilities in Central Florida, for example, they are facing some real challenges in how they supply their future needs. They are, because of their geology, they're able to do a lot of recharge type stuff there too. But a lot of utilities are looking at, they call potable reuse. So that may be a lot more prevalent in the next decade or so, where you're taking wastewater and instead of using it for reclaimed water to irrigate, you treat it further to a drinking water quality and use it for drinking water. Fortunately, we're not quite as constrained here as they are in Central Florida, but we still have our challenges.
And I'll try to hold myself back, because I said this is one of my areas that I love to talk about. Just a quick question. You mentioned the Floridian and you mentioned surface recharge. I mean, they're not connected in a lot of places. Do you consider them connected when you talk about recharging, or are you doing a rapid infiltration wells?
Good question. So depends on the region of the state you're in. Very good question. And in particularly west of I-75, the Florida aquifer is unconfined. So it means there's not really significant clay layers between the Florida aquifer and the surface. So in those areas, rainfall percolates through the surface into the Florida aquifer. When you get east of I-75, particularly get on the east side of town, it is confined, meaning there are clay layers between the Florida aquifer and the surface. And so in those areas, you know, the rainfall is not able to get directly into the Florida. And although, like a lot of people know in Gainesville, like we have a lot of sinkholes. So a lot of that water that goes into our creeks, all of our creeks locally end up in a sinkhole that go into the Florida aquifer. So in our area, actually, pretty much all that rainfall goes to recharge, because we don't, in our immediate area, we don't have any rivers that flow out to the ocean.
Okay. Yeah, and I appreciate the discussion on, you know, people coming in, because I would strongly encourage you to consider, you know, past results are not indication. I mean, we're seeing the climate refugees coming, you know, we're going to see people coming out of Fort Myers, but if that had come through Miami, Tampa, you know, some of those areas are not, people can't get mortgages there anymore. And so I'm expecting things to change significantly. And to your point, yeah, it's one thing to get the permit to say we have the need, but another thing to come up with the water. So I appreciate that discussion. On the group itself that you picked, it sounded like you were saying that they've developed their own groundwater model that they're using for our behalf.
So let me see if it's a complicated story, but let me try to make it a simple story. So we've been interfacing with the Suwannee and St. Johns River Water Management District for a number of years, that they've been developing this new, really big model they call the North Florida, Southeast Georgia model. And it's a very big, complicated model. It's kind of the new model that they use for measuring regional impacts. Anytime you develop a new model like that, it's going to be accurate in some areas. They refine it over the years. And so one of the things that we realized, that we demonstrated to the Water Management District, it was not producing logical results in our area. So based on that, what we did is we worked with them to develop what we call a sub-regional model. So you got a big model, and then we said, well, let's build a better model for this little area, and it'll fit in with the bigger model, but it's going to be more accurate for our area. So we engaged in an effort where we had our modelers, our liquid solution group modelers, working with all the modelers from the Water Management District to develop this more accurate model that could be used in our area. And there's a lot of work to do that and prove it out and whatnot. And we've pretty much at the end of that effort.
Okay, good. And that was going to be my next. So this is because I know you run into that problem. You have your model and they have their model, and your model.
They've endorsed it.
But the two water management districts are okay with the use of this model.
And they both water management districts were involved with building the NEFSIG model, and we were involved in that, and both involved in the sub-regional model. And then Liquid Solutions was part of all of that as well. And I mean, this is I want to say 9 or 10 year process that has built up to this.
And just, we're talking about, climate change and stuff. I mean, we've been blessed, and we may continue to be blessed with additional rainfall because of climate change, where other areas are experiencing drought. So
that may change.
That could change again.
We'd just like that rainfall to be more like spread out.
I was just in Morocco a couple of weeks ago, and they were saying they were going through a drought. They had 5 inches of rain last year. Where normally they get 8, so this was a serious. So we get
5 inches a day.
No, Yeah, so we are blessed with
Yeah, during the
water.
hurricane months, we can get 13 to 15 inches in a month, during these peak months.
I feel very fortunate to be in this area right now, looking around the world, and going, not having water is a problem.
You know, I lived in Portland, what do you call it? Be careful what you wish for.
Okay, just real quick. So my backyard used to flood, and so I used to wish there was a way not to have so much flood in my backyard. Now I have a sinkhole in my yard. It never floods anymore.
Oh, yeah, your
My
budget.
house is leaning, but sinkholes. Be careful what you wish for.
So one of the things that I was gonna circle back on with the LEAP program or anything else in the future, is there a move toward waterless toilets of some kind? Because they make incinerator toilets, incinerates, where you don't have any waste at all. They use electricity to just turn it into a powder, and you can put it in the garbage, and you don't use water to flush, good potable water. Just think of every drop of water we have in our toilets. We have made it to drinking water standards, poop in it and flush it away. It's kind of crazy.
In my travels, most every place I went, there were the two buttons on the toilet. The number one, the number two.
Why do we even do that? I mean, why do we do that at all?
So I will comment a little bit, we're not doing anything to incentivize waterless toilets or rebates or anything of that nature. But one of the things in the consumptive use permitting that we did in the last permit was look at the long-term effects of basically what we call passive replacement. And what that means is plumbing codes change. When you go to Home Depot, what you grab off the shelf to replace your shower head or your toilet is all of a sudden a very water conservation, a lot more than it used to be. And so over time, we're able to model some of that and just see that per capita use just continuing to go down. Like you replace your washing machine or your dishwasher, all of those things are significantly using less. And over a 20-year period, most people are going to replace a lot of those different things in their home. And so you have this passive replacement thing that's happening that is going to just continue to drive down some of that. But we're not doing anything actively to encourage the waterless toilets or anything at this time.
I think they're really like for home use. I don't know that they're necessarily sort of marketed.
And you have to decide, well, you're gonna use more electricity now, so you. So at this point, give me
I just got one question I've been holding on to out of curiosity. Out of the 21 to 22 million gallons a day you guys are withdrawing, typically on average, how much of that is being consumed, and then how much treated water does Murphy keep in reserve storage, ready to go, so to speak?
So we have 15 million gallons of storage at the plant. But that storage is kind of what happens is the water is like going into those storage tanks and then being removed from the storage tanks, so like on a regular basis. And then there's some water use or very little, but there's some water use and water loss at the plant just through the process, the treatment process. But most of that water, the vast majority is going just right out the system and being used by customers. And then, I can't remember the numbers, but 80 some percent of it or more is indoor use.
That's our estimate, yes.
Overall, it's about 81% is for indoor use, and the remaining amount is outdoor use. Now, if you have an individual customer that is a irrigator, it could be like 50-50, 50-50 or even more outdoor, but not all of our customers irrigate. So it's about 81% or it's indoor use.
But I guess what I'm getting at is of the number that you guys withdraw, that changes day to day based on
demand.
Yep. Yeah. So, is there an average?
21
is the average.
So you're basically pulling what people are using.
Correct.
Right.
Yes. So it is what they're using, but that changes on the time of the year. So in the middle of the summer, when there is a lot of irrigation, that could be 24, 25, and there could be other times when it's 18, 17.
Okay. I was just wondering if there was any, extra head, so to speak, that you guys were pulling. Yeah. So, okay.
All right, at this point, if everyone's good, I'd like to entertain a motion.
I'll make a motion that we recommend that they engage, what are they called? Liquid Solutions Group, LLC.
Anyone?
Second.
Any discussion? Any comments from the public? All those in favor, signify by saying aye.
Aye.
Opposed, nay. Passes unanimously. All right, thank you very much. Oh, interesting. And to your point, it's a fun topic, you know, I resisted the urge to hug Jason when he said, you know, on the electrical side, you know, that next electricity is hurting us so badly, but on the water, it's so immediate and easy to do, but yeah, so I kind of.
If you look at this discussion in terms of all the other local governments around the nation, we're really blessed. I mean, almost all the other governments are screaming and screaming and screaming about water availability, you know?
Yeah, no, I mean, I was, like I said, in Morocco, I'm watching people and they don't know what they're gonna do. I mean, they really don't know what they're gonna do. The reservoirs had shrunk to nothing. People are in serious
Lucky we have the
danger
rain.
for their livelihoods.
Howard Odom used to always talk about carrying capacity. And we're really talking about carrying capacity here. But if we use the word here, we're talking about our little county. It's a totally different issue than, you know, down in the Everglades or out in Arizona or whatever it is.
All right, so moving on, public comment. Any comments from the public?
Yeah, just Nancy dear, and just a short one of interest with the hurricane. And again, I'm so grateful for GRU and the expertise and I feel very secure here with you guys. But I've read some really interesting articles about Babcock Ranch that's about 15 miles from Fort Myers, and that they, you know, they're the solar community. I think it's 2,000 homes or something, but it uprooted trees, tore shingles off, but no major damage. They have water, electricity, internet, and now they're getting all the refugees. I just thought, you know, as we're looking at how do we go forward, that maybe there are certain details from how they did stuff that might be very valuable to us. Because they did very well. So.
Yeah, that's a very interesting case study.
Yeah.
Anyone else? All right, any member comments? Whatever topic you would like.
Whatever topic I'd like. So hopefully GRU folks have been feeling the love tonight, because the next comment I'd like to make maybe is not in that same vein. I was personally pretty deeply dissatisfied with the presentation that we received at our last meeting about the continuation of natural gas rebates. As chair of the meeting, I could not make a motion, but I would like to make a motion on this topic. Basically, I feel like we've had this conversation twice with GRU staff. It's been the same basic arguments both times. I think that the arguments are pretty unsatisfactory from my perspective, and I feel like we've gotten some public feedback on those arguments, including from Dr. Wendell Porter. I don't know if folks have had a chance to get to read his letter yet, but he wrote a pretty strongly worded letter in response to these arguments. He's the former chair of this committee. That to me pretty much eviscerates like most of the arguments that are made for keeping these rebates. And I don't want this item to stay on our work list indefinitely. And I also don't want it to just fall away without a vote. And I was kind of hoping that night as chair that someone would make a motion and we could have an actual vote. But I mean, I would like to make that motion that we end the natural gas rebates, converting people to natural gas. I think it's a really problematic direction for utility to be going in, especially given the headwinds of electrification and where things are headed in this country. And I think that it's time to address this, make an actual recommendation and move on from it. So that's where I'm at. I'd like to make that motion.
Well, let me just add the illegal. Is there any issue with us doing that? I don't think there is.
It's a regular meeting. We can make a motion at a regular meeting, correct? Yes, and specifically because I know that, we're going to be at a workshop next. It's going to be another month out. I would like to just at least hear where people are at on this, other members of the board, because we didn't get a chance to hear a motion and hear where people are at on it. If folks are just against it and we want to take it off our work list and move on, that's fine. But I'm going to keep beating on that drum until we make a decision.
So before you do, so we have a motion.
Yes.
Do we have a second to that motion?
So you know what? I don't care as much as some of the other people on this board, but I do think in general, it's silly to keep promoting gas. So I'll second the motion.
Okay, thank you. So now we have a motion and a second. Now we can have discussion. Tony, you'd like to?
Yeah, I guess part of what, when we gave the presentation, part of what we, I would love to hear more feedback about the specific concerns about what we raised. So, big concern that I have is I don't think we know the answer. And we clearly did not present that we thought we knew exactly what would happen if the rebates go away. But I'm very concerned from a business part of GRU, if those go away and we are no longer in the natural gas business and someone else comes into our community and does that, or LP comes in, what does that mean for our community? And what does that mean for GRU financially as well? And so we try to demonstrate what some of that exposure could be, but we just don't know the answer to that. And so I would love to have a conversation with the UAB instead of just stopping natural gas rebates, which could really damper our revenue projections or damper, again, someone else coming into the community and providing natural gas and not solve the overall problem that we're looking to solve. Before we know the answer to those questions, I would not want to endorse doing that.
I haven't had any say on this stuff at this point, but that's exactly the way I thought. Because what is the impact on the business?
Can I? Sure. Yeah, okay. I'm sorry. Did you want to?
So I was just gonna say, reacting to what Tony's saying, so then maybe a better motion or the next step should be to do that analysis and present us with that, because I agree, all we've heard so far is why the rebates are good and why the gas business model is good and why it should continue. We haven't really heard the what if scenarios or done a proper analysis.
Well, let me ask the question.
Not to kick
Can we
down the road.
I mean, it's easy to say we don't know the answer to that. We basically would have to try it. To actually know what the answer is there anything useful that could come out of a reasonably quick? Because I am frustrated by how long we've been talking about this.
I'm tired of hearing about it.
So is in a very soon future meeting, is there anything? Because we've had numerous presentations from GRU on this topic.
Yeah. So I wasn't quite prepared for this discussion tonight. So what I have been involved with for the last several months is trying to get to the answer of that question. So we were looking at TCO's expansion in other communities and what does that look like? Looking at LP companies and what they're doing. There are other companies that are looking at bringing natural gas into Newberry. So we were looking at some of that data over the last couple of months to see how would that translate here and what would that look like? I think, so I don't think that in a month or 2 months, I'm going to have any more data that's going to definitively answer that question. Yeah, I'm caught a little bit off guard. I guess probably what would be helpful for me, I wasn't a part of the earlier discussions. What would be helpful for me is what are some of the specific kind of additional information or additional feedback that the board could bring that we could address at a future meeting? I mean, I think that's what I would prefer, as opposed to you taking an action tonight that sends us down that road. Is what are specific things that you want to see or hear that could bring clarity for your all's decision making?
So 2 things. I mean, one, we're a recommending body. The city commission has asked us to make a recommendation on this issue. And so how long are we going to kick the can down the road, waiting on data that we might not ever get, truthfully, because there doesn't seem to be either the ability or the will to actually get this information that we're asking for. So to me, I say we make the recommendation to the commission. It's going to be their decision to make. And GRU can provide whatever arguments and whatever numbers it's able to provide. But in terms of the specifics, I actually think that the business case for this has been drastically overstated. Okay, we're talking about, you know, like when we use that number of like the portion of the GFT, right? That's a crazy big number to be talking about, considering the portion of sales that we're talking about here. All right, considering that like half of these rebates are going outside of the community to get new customers, and the other half are inside the community, actually displacing electric customers. I think we've seen the math that we're losing money potentially on those side of the rebates, 50% of them. So, and there were a number of other arguments that Dr. Porter made in his letter that I won't go into everything here unless folks would like to hear that. But to me, I think we've talked about this enough. We're not going to get enough data to like satisfy us, to satisfy you guys' end. And so we need to just make the recommendation and let the commission ultimately make the decision. They're the ones that are going to make the decision.
So can I just have clarity? You were saying a big number was given. So I'm looking at the presentation. I don't think we gave any big number of what the impact would be.
No, not what the impact would be, but when you all talked about the portion of the GFT transfer that comes from the gas side.
Right.
To me, what that is implying is that that is going to be at jeopardy if we make this change.
I want to be clear. I didn't imply that. I don't think that's implied in this. I don't know about past presentations. I'm just looking at when we talked about the GFT in this presentation, we just laid out, here's how much the gas system did with no, we're not implying that that's going to go away. And then what we did from a financial standpoint, we talked about, it's basically, you know, $80,000 in incremental revenue that we're growing, that would go away. So that $80,000 in incremental revenue would go away if we stopped expanding natural gas.
But
we don't know.
Stopping rebates does not necessarily equate to.
That's what we don't know.
And that's
the part that I'm trying to get a better understanding of that. Like, would another company come in and start expanding natural gas? Would LP company come in and incentivize LP? If that happens, and I think part of the question that I don't know the answer to is if either one of those things happen, if it really does happen and it starts happening, we're done. Like, cause it's gonna skip us and we're out of the natural gas expansion business. Expansion, not overall natural gas, but we're out of the expansion business. And I think one of the concerns that I have is for the ultimate goal of moving toward net zero, we would lose control of that aspect in our community if that happens. But I don't know if that's going to happen. And I don't want to give the impression that I know the answer to that. But if that happens, we then lose the control of the march to net zero from a natural gas standpoint because someone else is in our territory. It's not our territory. That's what the challenge with natural gas is. We don't have a territory. Anyone else can compete for that marketplace. And once someone else starts competing in there, we're going to be done because we're not going to be able to compete. The answer that I don't know, and I think I would love to kind of figure out if we could develop is is there a likelihood of that happening? Is there a likelihood of someone else engaging in the market in our community and essentially taking over that market? That's the big question. Or is the next development not going to put in natural gas because we don't have a rebate? The answer on that seems to be yes, more than the other one, just because there's more information about that. But that's something I think we can get a better answer for. Like if there's not a rebate, is the developer not going to put in natural gas? I think we can maybe get some answer and clarity there on the question of whether someone else comes into this marketplace and competes. I know it's a little harder, but maybe there's some things we could do, and I would love for input from you all to help try to figure that out as well. It does make me concerned to just hey, let's just try this out because that you might not be able to come back from it.
And just to, and I fully, well, I won't say full, I appreciate GRU's challenges with this issue because natural gas is an area where GRU has the opportunity to expand potential additional revenues where electrical, we're constrained. And so I know that's a very hard thing to give up, but as I've said in the past, we're trying to get to net zero. Having people, especially in new homes, putting in natural gas appliances, they're going to be around for the next 30 years. That's a long-term natural gas investment that we just, the arguments to continue the rebates would have to be so strong against that. I mean, I just don't, I'm with you. I don't see a balance there. We're nowhere near a balance. And quite on, if let's say by not having the rebates, some of these guys still put in natural gas with GRU. So we've saved GRU money for not spending rebates they didn't want to. Let's say we don't have the rebates and so they put in electric instead of natural gas. That's what we want. So, I mean, I just can't, and in my heart, I can't begin to justify financially incentivizing people and I understand it could happen. And the other piece that's coming on is natural gas is not as popular as it was. I mean, the health impacts of having natural gas in your house, more and more studies continue to show it's not a good idea. I mean, the asthma levels, all the other things that come from natural gas, and also the pricing of natural gas, availability, all this stuff is not pointing towards natural gas being what it was.
Let me ask you about the letter. Has that been sent to all the UAB members?
Yes. Yes.
Just this week, right?
Yes, yeah, just in the last day or so. So it might not have, I know folks.
For some reason, I didn't see it. I don't know.
I hadn't logged in.
It's in your GRU account, not your personal account.
Yeah, it wasn't forwarded, I think, to folks' personal accounts. Can I just, one last thing here. I also don't think that this is as quite as apocalyptic as it sounds. Like in terms of, GRU's business viability. To me, the best way to get the data is to flip that switch off for a year. And then we have real data over the course of a year. You come back to the city commission, come back to the UAB and say, okay, well, this has been the opportunity cost of doing that for the past year. Either it was a big deal and we need to really reconsider this, or hey, it was really not a big deal. Okay, like things are moving ahead. And so to me, making this decision now, trying this out is the only real way to find out, because otherwise we're always going to be in speculative territory about, what this could do, what this could mean. Well, let's try it for a year and see what happens. That's where I'm at. I don't think that we close that door and we can never open it again. I know there might be developments that happen over the course of that year. There might be this thing that goes on, that thing that goes on, but I don't think that door closes us forever because we make this change.
And so I will just say in my role, I think what I'd have to say about that is that it could have a profound impact over that period of time. If another user decides to invest in this area and build a pipeline or a network, it very well could have a profound impact that we couldn't come back from. And I think in my role, I don't want to speculatively get into that and lose that market. But I do not want to give the impression, I feel a couple of times, folks, I feel like there's these words like, this has been oversold. I'm not trying to oversell that that's going to happen. I don't know if that's going to happen, but the consequences of that occurring could be pretty profound. So I don't know the likelihood of it. And that's the part that I would love to get the answer to more. But the consequence could be very profound in terms of us getting out of the expansion of the natural gas business. That part of it, but I think almost equally as important, the profoundness of we're now losing local control of this. There'll be no march to net zero for those customers if another company is controlling those customers. Whereas we have the ability to transition to energy or, and I know I'm not trying to oversell the future of green hydrogen or renewable natural gas, but I mean, we're talking to companies about renewable natural gas right now. Green hydrogen, maybe a decade away, maybe more, but there's absolutely investment in that. Those are things that we transition to if we have those conveyance facilities. If we don't have the conveyance facilities, we have no control over that locally. and the expansion of natural gas locally. So once we lose that market, we have no control over the expansion of that natural gas. I don't know the likelihood of that.
And I appreciate what you're saying, because I have to say, in some of the past presentations before you went into position, I think use words like disingenuous, but they felt like they were very much presented in a way to say, we want this outcome, not to be, they were very alarmist and used big numbers and things like that. But I understand, from where, not to put words in your mouth, where you guys are sitting, you look at worst case scenario. What are some, what could happen, and this could be where we're not necessarily, where that doesn't take in probabilities and look out. And we are an advisory board who's not GRU. And that's what we're not supposed to be. That quite honestly, green hydrogen is about as likely as clean coal. I mean, you spend so much electricity to make the hydrogen. I don't have a number where that makes any sense. Green natural gas is not much more likely.
A lot of people looking at it.
I know they're looking at it, but
including our facility down there at FPL.
So
They're looking at it very seriously.
no, I know they
So
look at
are
it.
a lot of others.
No, and I agree, but in my opinion, as a modeler who's worked in this area a long time, that the numbers just would be very tough, very tough.
Only because of the energy to get into electrolyzers. There's other ways of getting there.
Okay, good. I would love to have it happen.
So I'm just curious, typically, when you give a rebate for gas, the two big appliances are water heater and furnace that use gas.
And dryer.
And okay, sure, maybe in the kitchen. So if the issue is one of control, and this maybe I'm naive and don't know a lot about the business, but why not offer rebates on electric appliances, those same types of appliances, and then still capture those customers as GRU customers? Now, I guess that's only in your territory, doesn't help outside the territory.
There are captive customers.
Right. So I don't know. Because I don't really see the value in encouraging people to buy gas appliances when you're gonna try to get them off those appliances later. So
I think, can I address that? So I think a couple of things. One is, so the rebates, they are incentivizing a developer to put in the infrastructure for natural gas on the front end. If they don't put that in, they're done. They're not going to be a natural gas customer. So it's an incentivization during, green spot, the green, what do you call it? Undeveloped land comes to be developed and they're putting in the infrastructure. And as we were saying last time, 54% of those are outside of our electric service territory. So, there are a lot, and there's going to be more and more outside of our service territory as things grow, because our service territory, we're up against that wall, and a lot of growth is going to begin to continue to occur outside of that. So I understand the cannibalization argument inside. But the other side of it is, and what we presented last meeting was also just from a customer standpoint, even though natural gas prices are high, it is still better for the customer to have natural gas at this time. They'll have a lower overall utility bill. And so that's something we're trying to balance the customer. When we talk about the three legs of economic, environment, and social, there's a social part of it as well, of just a lower overall cost to the customers. And so removing that will have an impact overall on a customer's bill, as well as, again, losing that kind of the market share part of it, and things of that nature.
So to that point though, and I think in my email that I sent out, I don't know that the numbers have been rerun with the latest cost of natural gas and with the latest equipment to that point.
I don't think they were in that data that we had.
And to your point about the natural gas, if the developer goes and says, oh, we're going to do natural gas, and the customer says, oh, I'd like to switch to electric, that'd be very expensive because the infrastructure is not there. You don't have a 220 line going into your, where your dryer is, and you would have to, it would be and that's what I struggle with, is the permanence of it. I mean, it's
Right.
one thing if you do something that's a very short term. I'm not saying turn off all natural gas today, but you get to longer and longer term stuff like a house and the infrastructure, for stuff we're supposed to be changing in the near future. I know it's getting.
If there are legitimate alternatives that the infrastructure can be used for, then that totally makes sense. I see that, but I don't know how far out anything like that really is. Yeah.
So go ahead.
Let's say that the point that Barry just raised is exactly the situation for my house. The house that I got when I came to Gainesville, somebody went all in on gas, all right? Dryer, stove, water heater, everything gas. And now I'm at a point where I would like to make that transition to electric appliances. And like Barry said, okay, that means a 220 circuit for this, a 220 circuit for this, means that raises the cost significantly of me electrifying my home. And so what we're essentially doing by this is stranded assets for people with natural gas infrastructure that is going to be very expensive for them down the road. When we know that we want everybody to be electrifying long term, I think that's pretty clear. We're actually putting a roadblock in the way of people doing that. And we're actively investing in putting that roadblock in the way. And that's my concern.
The other thing you forgot is not only do you have to put the 220 circuits in, but you have to usually enlarge the power coming to the house because the main panel can't handle it. That's what we had a lot of leak problems. They couldn't do a conversion because there wasn't enough electric coming to the house, which is the weatherhead that dropped the.
Any other discussion from the board on this? Okay, go ahead, David.
Well, so the recommendation that we made at the last meeting was to really continue this discussion. So I'm a little concerned about if you all make the motion, we're now going to the city commission and now we're relying on a vote, right? So four people vote one way and it's over and whatever way that is, that's where we're headed. What our recommendation from the last meeting, I'm just going to read it, was the Utility Advisory Board recommend to the City Commission that GRU continues the use of natural gas appliance rebates at this time with a commitment to reevaluate the rebates as GRU establishes its path to meet the net zero resolution goal by 2045. Part of the reason we were tying it to the IRP and looking at that goal is the IRP is going to engage the community into what the priorities are as we march forward toward that net zero. And then a plan to get there, meaning kind of like over time, what's the curve look like to get there? I'm a little concerned if we go the route that you all are suggesting, that you made the motion on, is that what we're really doing is now we're taking this now straight to the commission. They're going to have one answer. It's going to be 1 or 0 answer, yes or no answer. And then that's the path we're on. And it doesn't allow us to really integrate that into what our plan to net zero. It's like we're pulling part of our plan to net zero out. We're going to do something here and not be able to integrate that into overall strategy. Again, I think my recommendation is I would love to hear more about what we could do and provide more information to this board and continue that conversation instead of getting us there. But so that's it for me. That's kind of where I am. And just want to make sure that's clear.
Yeah, and I appreciate that. I mean, quite honestly, we've had this discussion. We've been having this discussion for years. So the thought of let's kick it down, we're talking another year or two down the road, it sounds like.
Yeah, it would probably be toward the end of next year. Yeah, about a year, probably a year.
I can't in good conscience recommend that personally.
So last thing I'll say on this, I would just essentially take the staff recommendation from last time and add one prefix to it. All right. Utility Advisory Board recommend the City Commission that GRU discontinues the use of natural gas appliance rebates at this time with commitment to reevaluate the rebates as GRU establishes its path. So basically, instead of just saying we're leaving the switch on indefinitely, we're going to turn it off until somebody can make a compelling reason that we should turn it back on. That's it.
I'll be a nay on that, so just go ahead.
Fair enough.
Any other discussion from the board? Yes.
So there was some concern in the doctors about GRU's demand and that we're summer peaking versus a winter peaking. I'd like to just remember last year, February, Texas, their all-time peak was a summer peak, and all of a sudden they went 15% beyond where they were at. And so if we're going to incentivize people electrifying, especially moving away from natural gas, that is going to be potential large burden on GRU to meet that demand for our customers, to the point where if you're turning off somebody's power, at least they still had natural gas to heat their homes.
Well, honestly, they didn't, because you can't run the blowers. And so, you know, even you use electricity, you can't run your furnace.
So I guess there were a couple of things there. There is going to be an impact, like if we're not adding natural gas customers, some of that, there is a peaking impact to our system. Again, those are things that I would love to be answering through the IRP process and not making a change that could have a pretty profound impact now. I would love to do that as part of the IRP process and understand what the impacts to our peak are on our systems, which will really drive several pieces of marching toward net zero and what we need to build to continue to provide, you know, electricity to our customers.
And going back to your comment, and again, I just to say, remind everyone, we're talking about natural gas rebates. We're not talking about turning off the natural gas system. So we're not looking at a dramatic instantaneous change in the system.
For certain, and I understand that, but my concern is that some of the questions we're raising are specifically, I think, not fully evaluating where GRU's net demand is at, or their peak demand is at. So right now our peak demand is a summer peak, but again, we were only, in terms of where that cold front was at, a couple hundred miles away from setting a GRU all-time peak last February. And you know, and so there were, I imagine that there were constraints on the system, FPL and Duke. I know there was a lot of the utilities around us were having issues bringing in energy during that particular time.
But I have to say, I know in previous years, GRU has been challenged to provide natural gas during some of the cold snaps too. You know, when we were really hitting some severe natural gas shortages across the country.
For certain, but residential customers are always prioritized first.
Sure. Yes. But everything else got shut down so that we can keep it going for.
Just for data, what was in the presentation, the natural gas usage offsets our peak by about 30 megawatts. So it's fairly significant when the peak's around 420, you know, some peak. 9%, 8%.
Any more discussion from the board on this topic? Any discussion for the public on this one? I thought you might have something to say.
You're probably sick of seeing me here for the past 2 years talking about the same thing. Roberta Gasmeyer. I'm gonna make this real short. So we know we have to phase off of fossil fuels, and the city has made the commitment to do so. We know that curbing our methane emissions is just as important as curbing CO2, and maybe even more in the short term. We know it's not going to be easy, and that's not going to be immediate, but we have to do what we can do, and we have to start doing it today. And we know we're not crazy pioneers in this gas removal process that many cities and states all over the country are prohibiting additional use in gas in homes. We know that the federal government considers this an important step because they have provided massive subsidies to replace gas appliances with efficient electric ones. And someone taking over the market is irrelevant because it's a temporary market. As you mentioned, we're not asking people to stop using gas. We're asking just simply to stop the rebates. It's a moral, for me, it's like it sends the wrong financial and moral signal to our neighbors that this is okay to continue using fossil fuels. And I would really appreciate a vote and to end it tonight. Thank you.
Thank you. Nancy?
Nancy Darren, and really appreciate the struggle. That's very evident and understood and respected. But I For the amount of the rebate itself, my understanding is we have the cheapest natural gas out there. So is a rebate of $300 or $500 really going to drive every customer into someone else's hands is one question. I have been very disappointed in those presentations. Natural gas is no longer cost effective and will not be full cost of expanding and maintaining that infrastructure with all the additional safety and air quality issues is going to far outweigh things. The payback of 3 years was at the old prices of $2.35. The presentations were based on 2019-20 and some 2021 prices, which were $2.35, $3.60. It's over $6 and it's been up to 10, and they expect it could probably be back up to 10 by this winter. Because of LNG, gas is now part of the international energy markets. So the pressures and the pricing, it's $57 shipping it over to Europe right now. That's where it's going. And so I think we've been insulated in the past, and we're now far more exposed to a lot of danger. In that it's destroying our last window of opportunity to keep global warming down, because in a 5-year period, it's 114 times worse than CO2. One of the rationales is, we could be losing potential customers. I think, and with this IRP and all, we've got to be looking at different models that we are not burning to earn anymore. We cannot do that. But even now, people are demanding heat pumps, looking at induction stoves. Higher end homeowners and professional chefs are turning away from gas because of health and pollution concerns. And shifting is important for equity as well. There are about 20 to 50 million American buildings that haven't had energy upgrades in about 40 years. And the IRA bill and all these incentives now toward electrification is going to let them leapfrog over natural gas. Many states and cities are banning new gas infrastructure and appliances. And people are getting more and more aware of the bad health impacts. A hashtag I just saw said, faster cooking, cooler kitchens, methane-free homes with induction. New York Times had an article that gas hookups in new construction are being ended. And it's not just that the New York City Housing Authority has initiated a pilot program to install induction ranges to help meet the sustainability goals. And they're doing subsidies for people to get induction. It's a workhorse, and they discovered other advantages over the summer. The kitchen didn't get as ferociously hot as it would with a gas stove, and the absence of open flames led to a decrease in burns that people were getting. So I think that I hear the concern and especially in our leveraged situation and all that. I think that there is so much evidence and there's so many things to begin to look at with different modeling structures that will increase our revenue, and that's toward electrification and this kind of stuff, not toward natural gas. And I agree with Barry about green hydrogen and all that. It's we've been waiting a long time on a lot of things that
It'll be here.
that don't come. Anyway, so my 2 cents, I would go ahead and end the rebate, because it's not ending natural gas. It's just, and if we're the cheapest folks around anyway, some people may still want to do it.
And in the Carter administration, natural gas was 45 cents per TCU. TCU.
All right, I think unless anyone has anything more to say on this one, we're ready to call a question. Okay, so we have a a motion on the floor. Does anyone need that motion to be reread? Are we all good? All, this will be an interesting one. All those in favor signify by saying aye. Aye. So we need a count on this one.
Oh, sorry.
Please raise your hands. We have, that looks like 5 in my count. All those opposed, nay? And 1 abstention?
Not voting.
Not voting. Oh, I'm sorry. That's 1 side. So that passes on a 5-1 vote.
So, Mr. Paul would say.
Yes.
Can I just- One last thing. I respect the hell out of you, Tony, and I'm really sorry if you feel ambushed tonight. It was not my intention to ambush you at all. I just wanted us to call a question on this. Now it will go to the commission who will ultimately make their decision. I know you all will be there and make your argument. And I think some folks from the community will probably be there and make another argument. And the city commission will decide. I just wanted to get this off our work agenda. So I appreciate the discussion. I appreciate everybody being involved, and again, no disrespect intended, no ambush intended. I felt ambushed at the last meeting because I had the chair and I didn't really feel like I could weigh in on this. I really wanted to weigh in on it. So thank you.
It's a tough position.
Yes.
Sometimes I have to, because I honestly expected to come back from my trip and go, oh, I wonder what they did, and to see nothing happened again. It's kind of
Can I just, so I don't feel ambushed, but I would have liked to have staff here and to be able to lead a discussion. And so it was like, my intent last time was to start us off. I even talked to you about, I don't necessarily think we need a vote at the last meeting. I want to have this discussion with the UAB and that we work collaboratively. And that is really the intent of moving forward. So I would like to have stuff like this agenda just so we can have staff here to be a part of the discussion. The second part is that, again, in my role as a general manager, it is very difficult to be walking into extremely uncertain waters with something like this. And with that could have a profound impact on our community reaching net zero in a negative direction or a positive direction, could have a profound impact on revenues that could keep us from going toward net zero, and the ability to invest in newer technologies. And so I need to be very clear and transparent about that. When things like this are happening, I have got to give the full picture of running the utility and what those impacts could be. And so with a significant amount of uncertainty in this particular topic, I'm just concerned about that. I don't think I portrayed through any of the last meeting or this meeting that I know what's going to happen. I think that's the concern in my estimation, is that we don't know that impact, and to make a pretty significant, could be a significant decision with that uncertainty, I don't think is wise. And so that's why I shared the perspective that I shared. So, but I think we'll, and then the last thing I will just say is the reason I wanted to have this body allows us to have much more collaboration, a commission meeting. It's not as much that you can have all this discussion and back and forth. It's more of a decision-making body. And so that's why I wanted to have another meeting here, is to have that collaboration and discussion to better prepare us for going to the commission and what that product is. So I just wanted to share that perspective and why, why we were addressing. And I know I was not a part of the previous, discussions that had occurred. I was trying to move us in a way that we could do that in a more collegial way. But I mean, this will take us down a path, and we'll figure out where we're going to go from here. So,
and you just take us down the path to the city commission making a decision.
Right.
That they've asked us to make. So thank you. I know this was not an easy topic, so I appreciate the discussion. Any other member comment? Next meeting date?
please no.
If I could just add a couple things before we get to the next meeting date. I received an email tonight from Member Lewis. She has resigned from the UAB. So the reason that she's giving is that she wants to work on the community side of things to help people with the issues that they have with GRU, and she thinks that would be a conflict of interest. So we'll be taking her resignation to the city commission at their next meeting, and then that will open up the process for a new member to be elected for the remainder of her term. So
Does she come from a certain geographical area or certain commission member district or something?
she's just a member that is kind of at large, just represents the community. Sure. So there's that. I wanted to make you aware of that. And I also wanted to make you guys aware that member folks had asked me to purchase some like these publications from the APPA, Governing for Excellence. I've got 5 of them. Now that we're in a new budget season, I can purchase some for the rest of you. So I'll let you all decide who wants to take those home tonight, and then I'll get more later for the rest of you.
Thank you for that, Robin. This is a really good publication for anybody that wants to grab one.
Much better than governing for mediocre.
And then one final thing, I am going to be on vacation.
I'm sorry, we're gonna vote that down.
You're gonna vote that.
They unleashed me today, so anyway, for your workshop, I will be on vacation, and my medical colleague, Christine here, will be filling in, so.
And that
And then-
workshop will be,
What is our next meeting date?
the date for that?
The date will be, October 25th, that's your workshop.
27.
I never get these.
She's not gonna
right
be here.
now.
Tuesday or Thursday?
It's a 20, it's a Tuesday.
That's the 25th.
Okay, it is the 25th. I thought it was Thursday.
So I didn't get it wrong.
TTC is the 27th.
Okay. Don't worry. And then your next regular meeting will be on November 10th. And as far as I know, we should be able to go back over to City Hall for that.
So the 2 topics that we had talked about for that meeting on the 25th is to go back to the work plan and what the priorities are, but also to revive the energy policy. And to have a discussion of what do we want to, what do you all want to do as a UAB?
Okay, great. Thank you.
Have a good vacation.
Thank you.
Okay, the next meeting is on what day then?
The 25th of October.
Tuesday, the 25th.
Tuesday, the 25th.
Yes, that'll be your workshop.
All right, with that, I think we can adjourn.